This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. CPI at 8:30. The countdown clock. Is the countdown clock for Lions, Bills, or for CPI?
I think CPI.
CPI right now. And we've got it here at 8:30 this morning. Paul, I don't know. I'm looking at, core 3.3%.
Yep.
There's a real estate thing. Is inflation that bad right now?
The rate is down, Tom, significantly from where it was back in the pandemic time. But again, just absolute prices that you and I and Lisa pay at the...
I'm still shocked.
At the supermarket or wherever. They're just significantly higher than pre-pandemic. So I guess that's what happens when a pandemic comes along.
You get the little French Cornichon, like pickles, cucumbers,
Sure, who doesn't?
They're up. I mean, they're made south of Paris, like 60 months. They're up. They're higher.
Yep.
You go down the aisle in the grocery store, and it's December 18th.
What's higher is chocolate. And you see Mondelez making a bid for Hershey. I mean, the cocoa prices are out of control. There's these droughts around the world, and the places where they grow cocoa, I guess, is a problem here. It's been multiple years.
The Bloomberg story today is really quite good. I learned a lot.
Yeah, it is.
And they're catching up with Mars.
Yes.
So I didn't know Hershey says Kit Kat. Lisa, did you know that?
I did not know that.
Lisa,
I don't know.
Solid candy
I thought Kit Kat was like separate, like some fancy British company, but no, it's.
And what I like is Mars is a private company. Isn't that amazing? The largest confectionery company in the world.
I had an abusive childhood. I didn't know until I was 16 that the little Hershey's Kissies with the aluminum, I was told those were adult chocolates.
Oh.
And that you couldn't eat them.
Wow.
If you were a kid. And I was like, 16.
Tough crowd.
You mean I can eat those as well?
I got to remember that.
That's a good pro tip there. We say good morning to you. We've got lots of discussion. Very important guest coming up. Elizabeth Economy, formerly with the Department of Commerce in Gina Raimondo, truly expert on China. Dr. Economy to join us here in a bit. I mean, just lots going on this morning. No other way to put it. Red and green on the screen. The VIX 14.39 from the Interactive Broker Studios. Our Bloomberg Business Flash is Lisa Mateo.
You got it. It's CPI day. Investors watching closely. It's a final major read on the economy before the Fed's rate decision next week. So let's start with NASDAQ futures, up about 0.1%, 36 points. Dow futures, little change, down 42 points. And S&P futures, little changed, up about 5. The 2-year yield, 4.16%. That's up 1 basis point. The yield on the 10-year, 4.24%, and that's up 1 basis point. To currencies, the dollar strengthened. This is after a Reuters report that Chinese leaders are considering allowing their currency to weaken. We have the Bloomberg Dollar Spot Index up about 0.2%. The Chinese yuan, that is down about 0.2%. I'm pulling an audible here because Macy's came out. I'm ripping up the script. We're going straight to earnings. Macy's out with their report. Being delayed from November, you remember it discovered that employee hit up to $154 million in expenses over several years. Well, now the retailer came out, said it trimmed its profit outlook. Its shares are down about 9%. Then you have Dave & Buster's. Their shares down 14%. The company reported a wider quarterly loss, said its CEO had resigned as well. And finally, shares of video game retailer GameStop are up 2%. It swung to a quarterly profit, and that was thanks to lower expenses. After the bell, we move on to Adobe. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Quickly here, Paul. If you got a bellwether stock and the 10-year track record is 7.1% per year, that's really not getting it done.
That's not getting it done.
So you released some fancy headlines into the Christmas parties this week. Anybody going to notice $7 billion more in structural cost savings?
From ExxonMobil. I mean, they're also talking about $27 billion in capital expenditures. I'm looking at the FA function on the Bloomberg terminal, Tom. Even with $27 billion of CapEx in calendar year 25, the company's going to throw off $34 billion of free cash flow. And I'm watching the TV show Landman on Paramount Plus, by the way, so I'm learning all about the energy patch.
Oh, an expert.
Yeah, I'm becoming an expert here. But I guess if you got oil at $70 a barrel, what's your cost? Bloomberg BNEF says it's like $50 a barrel, so you're making money every time you pull a barrel.
We'll cover this with our oil experts. One headline here: ExxonMobil reports plans to 2030 to build on unique advantages.
Okay.
It is our unique advantage right now. Joining us with PNC. I'm trying to get it going here.
Amanda Gotti, yeah, we're going to go right there. CIO, PNC's Asset Management Group. Amanda, thanks so much for joining us here. I mean, Tom has had a credible 2024. He's been long the S&P. He's been long the Mag 7. For the rest of us, what do we do for 2025?
Well, it's great to be with you guys. Thanks so much for having me. I think 2025 is going to be a little bit of a different year. And we're starting to see signs of that in the fourth quarter and even post-election, in seeing a bit more in terms of market breadth and a broader earnings growth trajectory and participation. So the last couple of years been all about the top 7 names, but I think 2025 might actually see a different backdrop, a more quality oriented exposure. And I think multi-asset investors will welcome that change for sure.
Is quality Mag 7, cut to the chase? Do I sell? I don't own them.
Oh, you don't?
Do you sell them into this? Paul owns them big. I mean, that's why he's living large.
Oh, no, I don't think you go short on the Mag 7. I mean, we certainly are not short. We're happy to ride that wave. But I think the pace of advancement and their, striking leadership advantage relative to the rest of the 493 names in the index is going to be very different in 2025. Not quite the edge that we've seen the last 2 years.
Still getting Exxon headlines out, folks. This is so Exxon, as you know them over the decades, is a financial company that happens to do oil. This is just great. Exxon boosts Pioneer deal average annual synergies to over $3 billion. They just boosted I love this word, synergies by 50%.
There you go. Why
synergies.
not? Yep.
Did you study that at Duke? Did they have synergies?
Yeah, we had
Synergies 101?
Yeah, exactly. Amanda, so let's step back here. I mean, how about the bond market here? I mean, the bond market's delivered some positive returns for investors in 2024, particularly on the more risky side, leveraged loans, high yield. How do you think about fixed income in 2025, given that the Fed, I guess, is cutting? I'm not sure to what degree.
Yeah, it's a tricky scenario, certainly for fixed income investors, because what we've seen since the Fed pivot and the Fed lowering rates is actually longer term interest rates rising. It's going in the exact opposite direction. And so that is catalyzing some volatility and a bit of sort of repositioning on the part of fixed income investors. You're right, the below investment grade, riskier parts of the market have been leading the charge all year. And it's really because the backdrop, the underlying fundamentals of the economy have continued to be sound. We're not standing at the edge of a recessionary cliff. I think the challenge for fixed income investors in 2025 is that spreads are really tight, aka valuations have a lot of the good news priced in. And so the yield story is very attractive, but it may not be the total return story that it has been.
I'm absolutely fascinated. Jay Bryson coming up with Wells Fargo as well. Amanda Gotti, the fact is the core CPI series doesn't indicate a disinflationary vector. I'm sorry, on a first or second derivative basis, we're not there yet. Is the Fed out front of the debate?
Well, I think the Fed has a real dilemma here. I've been saying all year that, try as we might to win this inflationary battle, we have not won it yet. And so when they started to lower rates in September, I was like, hey, what the heck is going on here? But there is an argument to be made that they can recalibrate rates to where financial conditions have eased to and not actually ease financial conditions further. They've done about all they can do in terms of right sizing or recalibrating to current financial conditions. We do think they'll take another step to drop 25 basis points on the policy rate in the December meeting. But in 2025, I think the path is very uncertain in terms of what they do next.
On the equity side, Amanda, are there some sectors that screen well for you guys at this point, or maybe factors that screen well?
I think the easy place to look at in terms of screening well from a factor perspective is certainly momentum. But I think, you've seen in the headlines very recently that momentum story may be reaching its limits, or maybe that trade is dead. And so we're actually sort of trying to think about momentum from a more creative perspective. Is there an equally weighted kind of momentum factor there that aligns with our broader earnings growth, a broader market leadership participation next year? So I think factors could be helpful in multi-asset portfolios in 25.
I got a quick question, 30 seconds. Amanda Gotti, which factor forward is important?
Which forward factor?
Yeah,
well, I
which
think
forward
quality.
factor?
So I think quality matters a ton. I think size matters a ton. And I think if we can get creative around momentum, there's still some opportunity in 25.
Liz Ann Saunders emailed in and says, ask Amanda about factors.
Exactly.
Yeah, thanks for listening, Liz Ann.
Yep.
Amanda Gotti, thank you so much. She is with PNC Bank, their CIO Asset Management. Greatly appreciate that this morning. Red and green on the screens. Stay with us worldwide with our news in New York City. Michael Barr.
Tom, Paul, Lisa, we begin with the arrest of a suspect accused of murdering United Healthcare CEO Brian Thompson on a Manhattan street. Let's get the very latest with Bloomberg's John Tucker.
The drama surrounding the intense manhunt for suspected shooter, 26-year-old Luigi Mangione, has now morphed into a legal drama over his extradition from Pennsylvania to New York. He's fighting it. As he was led into the Blair County courthouse, he yelled to reporters.
Completely out of touch, and it's an insult to the intelligence of the American people. It's time to finish.
Mangione has a defense attorney. Thomas Dickey says his client intends to plead not guilty to all charges.
We're going to use the process and use the Constitution and the rights that are available to any one of us in this room and any American citizen or person charged with a crime.
Meantime, in the weeks leading up to the killing, friends and family worried about the accused shooter. A former roommate in Hawaii says Mangione struggled with a back injury.
The severity of his back issue was such that it was very difficult to have physical relationships with women.
While the extradition battle unfolds, Altoona, Pennsylvania police say some threats have been made against their officers. In New York, I'm John Tucker, Bloomberg Radio.
South Korea's former defense chief has attempted to take his own life as police and prosecutors investigate the country's recent short-lived martial law declaration. Kim Jong-un, who was in a Seoul detention center, is now said to be in good condition. Weather conditions were forecasted to improve this week in Southern California and aid firefighters in their battle against wildfire that has forced up to 20,000 people from their homes. The blaze has grown to more than 2,800 acres and is 0% contained. It was not immediately known how the so-called Franklin fire started. It tore through part of Malibu, and celebrities living there include performers Cher, Dick Van Dyke, and his wife. They were among the evacuees. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Okay, come on. Josh Allen. I mean, he's the one person that can go after the Lions, right? I mean, he's the one guy the Lions fear. This is going to be a great game.
Oh.
It's like Super Bowl
I'm
preview.
telling you, this is going, bet the over.
Bet the over.
Oh,
Okay,
I book it.
Book it. Okay.
You know, well, don't book it. No, don't do it. But no, I mean, I see this as a high scoring.
Are these two quarterbacks the same style? Or are they Goff and Allen, are they different? Because my amateur take is they like to throw the ball.
Yeah.
And they got receivers that can actually catch it.
That's why this is going to be a high-scoring game.
Yeah, the control room just woke up. They say Allen runs, Goff doesn't.
Yeah, you haven't
Allen's
seen
a big
Goff
guy.
yet.
He can do everything out there.
Yeah.
Go Bills.
All right.
Plus, you got gambling Dan Campbell, Mr. MGM himself. I love it.
It's aggressive ball, isn't it? The ESPN matchup now is 58% Lions, 42% Bills. We need to do more football talk through the show. Stay with us worldwide for more football talk. Aston Villa next.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures mixed. This is ahead of more inflation data out this morning. That's going to offer the Fed another look at price pressures ahead of their policy meeting next week. Swap trading projects about 85% chance of quarter-point rate reduction this month. Let's start with NASDAQ futures. They're up about 0.1%, 33 points. S&P futures, little change, up about 5. Dow futures, little change, down about 31. The two-year yield, 4.17%, up 2 basis points. The yield on the 10-year, 4.25%, and that's up 1 basis point. To currencies, the dollar stronger after this Reuters report that policymakers considering the possibility of allowing the yuan to depreciate. We have the Bloomberg Dollar Spot Index up about 0.1%. We have the Chinese yuan down about 0.1%. Few companies making news. We talked about it. Exxon increasing capital spending to $27 to $29 billion in 2025, and that's because it's adding that $60 billion purchase of Pioneer Natural Resources to its oil production plans. Its shares are up about 0.5%. Kroger, its $24.6 billion Albertsons deal, well, that was blocked by a federal judge. It said the takeover would lessen competition for U.S. grocery shoppers. And finally, General Motors shutting down its Cruise robo-taxi program. That's due to high development costs and also reputational risks. General Motors invested more than $9 billion in Cruise. Its shares are up more than 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Yes, we're going to do the newspapers. I get an email from the same person every day.
Every day.
6:42 a.m. Is Lisa doing newspapers today? She's got there's an unlimited number of stories.
Yes, there is.
To cover. On foreign exchange now, to me, the litmus paper of the global system. Jane Foley joins from Rabobank. Jane, what is the FX market telling you about confidence in equities, confidence in our capitalism globally into next year?
Well, I think the fact that the dollar is strong tells you one thing, but it's also telling you other messages. So, for instance, if we look overnight, stocks certainly were not too confident going into the US CPI data, and that's probably because the markets are wondering if there is just too much good news priced in. Of course, if CPI this afternoon comes in, or for the morning for you guys, if it comes in on the stronger side, well, can that equity rally sustain, etc. However, of course, if the CPI number is stronger, well, that could be good for the dollar, because again, it does question that outlook for the Fed. And we've just heard your previous guest, talking about the question marks as to how much the Fed can really ease in 2025. Well, we would say the same sort of thing. We think they'll go in December, go in January, and we think that's it, that the Fed's easing cycle could all be over by next month. Whereas other parts of the G10, other parts of the global economy, well, these central banks are going to carry on cutting interest rates.
Paul, I walked in today, first thing I saw on the Launchpad, Bloomberg Launchpad, Euro 104.
Yep.
I mean, that's still a shock.
Yeah, absolutely, Tom. And, we've seen the Bloomberg Dollar Spot Index, Tom, up about more than 5%. Jane, really, since late September.
Really?
Here.
I didn't know that.
Yeah, it's been
5%.
It's been a nice move. So, Jane, is there any stopping that type of momentum? If, in fact, the Fed may be done cutting rates relatively soon, is there any stopping the U.S. dollar?
I think, with the exception perhaps of the Japanese yen, I think there's a very good argument to be made to say that at least into the middle of next year, the dollar might outperform all of the other G10 currencies, because the majority of these are likely to be cutting interest rates. The majority of these have got far weaker economies. You don't have to look that far. Look at Canada. They're expected to cut by 50 basis points today. Their economy is weak. Look at their unemployment rate, really quite different to the resilience that we're seeing in the US labor market still. Look at New Zealand. Look at Sweden. You have significant weakness in these economies. And then, of course, look at Germany. Look at France. So from that point of view, you get to the viewpoint, well, look, is inflation back in the box in these countries? And if it is, well, how much further can these central banks go? And how many of them are going to use 50 basis points increments as well?
How about the Japanese yen? I mean, I'm just not sure what to do there. It's at 152.59 here. I mean, where is the Bank of Japan here?
Well, there were some comments out overnight suggesting that the Bank of Japan, could wait, that they're not so worried about the FX implications, perhaps, of a move, and that sort of set the market back a bit. I think the market had been building up this expectation that there could be another interest rate hike as soon as next week, December the 19th. So those expectations perhaps set back a little bit. But overnight there was another strong PPI inflation report from Japan. There was another report from, I think this time it was a metal workers union, saying, yes, that we need higher wage increases for union workers, something which has been endorsed, of course, by both the government and the Bank of Japan. This is part of their plan to rid themselves of deflation, pay the workers more. So, we are, I think, on track for seeing more hikes. Perhaps the market's not certain whether it will come in December or early next year, but right now it does seem quite likely that we will see progressive, if not cautious, interest rate hikes next year from the Bank of Japan.
Jane, the heritage of Rabobank is hedging commercial transactions. What's your speculation going the other way 6 months out? What's the currency pair where I can make Jane Foley big figure gains?
Well, from that point of view, it's probably going to be somewhere in EM, but that, of course, is risky. That's the nature of the game. If we come back to the markets, I think it's really quite interesting as to whether or not central banks will actually want a weaker currency. So we can look at, euro dollar, we can see it weakening. How many German exporters would actually really welcome a weaker euro? An awful lot would be my response. Look at Canada. If they're facing bigger tariffs, how many Canadian exporters would want a weaker Canadian dollar? Probably quite a lot of them. And this is quite interesting because we do have this environment now, post-pandemic, where there is stickier inflation than there was in the post-global financial crises for lots of structural reasons. But at the same time, allowing for that there are going to be pockets of time, and I think 2025 could be one of them, where there are reasons, and tariffs and dropping inflation are those reasons, where certain countries could actually start to welcome again weaker currencies as a way of dealing with some of these risks that they're facing.
Jane, pound sterling, what's your thoughts there right now?
Well, I mean, I don't think it's going to be able to catch up with the dollar, but against the euro, I think it can, and it is. And this is partly related to the fact that, we're all aware that service sector inflation in the UK, it just remains very, very sticky. There seems to be a pretty good consensus view that the Bank of England has to be pretty cautious in cutting interest rates, so maybe 3 or 4 times through next year. Whereas the ECB could be cutting interest rates consecutively into the spring. And so sterling, if you like, is just outperforming the euro whilst just not being able to catch up with the dollar.
Jane, thank you. Jane Foley with us with a nice brief this morning from Rabobank. This with DXY out near 106.5, 106.5. Yen 152-ish, well in from 155. Stronger yen in the last couple of days. Sterling at 127 level. And I mentioned euro to 4 decimal points, 105.16, 1.0516. We go to 4 decimal points here.
Sure, why not?
There is an absolute tour de force. I'm putting it out on Twitter right now. Robin Wigglesworth over at the FT recapitulates the New York Stock Exchange 400-year bond. It was a gift from the Netherlands in 1938. It's an actual physical parchment.
No, really?
It's the oldest bond in the world, and it's a perpetual. So yesterday, on the 400th anniversary, it paid 13 euros a year. Yesterday, the New York Stock Exchange collected 299 pounds of owed interest.
Nice.
From the Dutch water company.
The Dutch water company.
That was funded 400 years ago because a dike broke.
Okay.
That's
400 years?
It's just an incredible effort by Robin in scope and scale and the history of us all.
Yep.
I don't know. Can I get out of triple all leverage cash for
buy the Dutch water
perpetuity bonds?
Yeah, exactly. Why not?
I mean, that Austrian you told me to buy, that's worked out.
Yeah, that's worked out.
97 year. I think I'm down 35% in that puppy right now. Got lots coming up. Ambassador Hormats will join us, of course, in Syria. Robert Hormats is coming up in a bit. Red and green on the screen. CPI in 1 hour. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Investors kind of in this wait-and-see approach before today's consumer price index. Economists forecasting a 0.3% increase, which would be the largest since April. Now, in October, U.S. consumer prices rose 0.2% for the fourth month in a row. Meanwhile, some more data. The MBA Mortgage Applications Index, that rose for a fifth week in a row. It increased 5.4% last week after rising 2.8% the prior week. We have NASDAQ futures up 0.2%, 42 points. Dow futures, they're a little change, down about 9. S&P futures up 0.1% or 6 points. The 2-year yield 4.17%. That's up 2 basis points. The yield on the 10-year 4.24%, and that's up 1 basis point. We head over to commodities. We have oil edging higher right now. Brent crude up more than 1% at $73 a barrel. WTI crude $69 a barrel, and spot gold at $2,695 an ounce. A few companies making news. We'll start with SpaceX. Its valuation jumped to about $350 billion. The company and investors agreed to buy as much as $1.25 billion of insider shares at $185 each. And the Financial Times reporting Blackstone, it may pull out of that joint bid for Bausch & Lomb. That's due to a high price tag. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Greatly appreciate it. Joining us now, I'm going to give too short an introduction, and he deserves a much longer one, is Robert Hormats. Some people talk, others do. And back to the tenure of Secretary Kissinger, Bob Hormats has traveled the miles of the Levant and Eastern Mediterranean in chaos. Now, to be clear here, you weren't there for the great Syrian revolt of 1925, 1927.
I missed that.
You missed that one.
Yes, that's right.
Why is Syria different now than the mess Paul Sweeney and I grew up with? What's different now versus Kissinger and Hormats in the 70s?
Two things mainly. One, you had Hafiz al-Assad running the place.
The father of
the
Assad.
father of the son who's just vacated his throne to go to Russia. But Hafiz al-Assad did not want big dust-ups with the Israelis. As a matter of fact, he was the one who created that buffer zone that was now being occupied appropriately by Israel because the Syrians have pulled out of it. But second, in trying to get a settlement in the Sinai, we always tried to keep good relations with the Saudis, the Syrians, and others, the UAE and other countries in the region, including the Iraqis. So, and even the Iranians at that point. So there was a much better dialogue among the various countries to try to get some disengagement between the Israelis and the Egyptians, which ultimately did work. But it took, in the Middle East, you have to see a lot of people because there are a lot of power centers. And the other thing in Syria is it's really an amalgam. You have the Kurds, you have the Alawites, you have the Sunnis, you have the Shiites, and they're all taking different points of view.
Hormats owns this. I just watched Lawrence of Arabia, but Hormats owns it. I mean,
Bob, what does this mean, this change we're seeing taking place in Syria? What does it mean for Russia and Iran in that part of the world there?
It dramatically weakens Russia's presence there. Russia is seen by the Syrian people as having supported Bashar al-Assad. They are not very well liked. They have one base, Latika, and then they have a seaport. They want to keep them. I think that'll be part of the negotiation, but I can't imagine the average Syrian wants them to stay there. And Iran has had its allies, in effect, get decapitated or weakened very badly. So all of its tentacles, essentially, the Houthis are still there, but the others are gone. And
should
Hezbollah is weaker.
Should the U.S. let Erdogan take the northern border of Syria to the southern border of Turkey, worry about the Kurds, that's never going to go away. Should the United States project to southern and southwestern Syria to try to provide stability around Damascus, north to Homs, or is there a different approach?
Well, there are two really good points there. One, I think we have to work closely with the Turks, but I also think that we have to remember that the Kurds were part of the coalition of forces that overthrew Assad, and therefore we have done a lot of bad things to the Kurds and sort of pulled the rug out from under them in the past. I think we want to try to convince the Turks to work with the Syrian Kurds and not go in there and take advantage of this and weaken them.
Okay, this is too an important conversation. I'm not going to mince words. I got a tweet out this morning with the president-elect making fun of Canada is the 51st state. Do we have a potential sobriety and gravitas in state to handle these incredible nuances of the Levant? I don't see it.
Well, it's very complicated, and people in the past have found it very difficult. But you know, you have to work with the Kurds because they're part of this coalition. You have to work with the Turks because they're actually now the most powerful country other than Israel in the area. And Iran's ability to exercise influence has diminished dramatically. The Hezbollah has been weakened. Its friends in Syria are gone. That whole notion of moving arms from the Iran to Lebanon is really diminished or probably eliminated for the moment. So we have to have a very subtle diplomacy, and you have to talk to all the parties. That's the one thing we learned about the shuttle diplomacy. You couldn't just talk to the Egyptians and the Israelis. You had to talk to others because it's a complicated area. And if you want to preserve peace, you've got to have a dialogue with a lot of people, and that means sort of steady focus.
What do you think under President-elect Trump our role will likely be in that part of the world over the next several years?
I think he's probably of the view that we should pull back and do relatively little. I don't think he has this fierce, or a lot of people around him has this fierce anti-Iranian point of view. And the Iranians now are probably going to be spending less money on their friends and allies in the region who are now, for the most part, decapitated or unable to perform anything like what the Iranians hoped, which was their surrogates in the region. They can't play that role anymore. So the Iranians probably are going to spend more time on nuclear. On the other hand, to strengthen their own power. On the other hand, we have to demonstrate that we have good allies in the region, good friends in the region, and strengthen our relations both with Israel and with the Sunni Arabs on the other side of the Gulf.
We're anxiously awaiting Robert D. Hormats, The Price of Liberty 2.0. We expect that book out. The movie rights have already been sold. The heart and soul of Hormats diplomacy is a fiscal soundness at home. What happened, Bob Hormats?
What happened is that fiscal policy is broken in this country, that each side makes compromises with the other on tax cuts or spending increases. The budget deficit is really out of control, and so far there have been very little, other than talk, very little in the way of specific measures to curb the budget deficit. And if the U.S. continues to have a big budget deficit, it's going to dig into and reduce the ability to provide money for our defense. We need a strong defense system in a world of war. We're in a world of trade wars, and we're in the world of actual wars. And we're going to need to have a strong defense capability and a strong industrial base to support our defense capability and put more money into defense technology, which is extremely important. Most wars in the future will be fought by drones, by effective data use, by effective intelligence, and the United States is going to have to be ahead of the game on intelligence, ahead of the game on these non-manned military weapons, and that's going to be extremely important, and a much more coordinated battlefield with the Navy, the Army, the Air Force, and others working together, and data is what's going to enable them to coordinate better, which we need.
Bob, what is your view of Russia at the moment? I mean, they're obviously got their hands tied in Ukraine. How should this incoming administration deal with Russia over the next several years and Mr. Putin over the next several years?
First of all, I think the U.S. has to continue to support Ukraine. I know it's going to be expensive. I know it's not as popular as it was. I know there are people in the administration who don't want to do this, but a demonstration of weakness, of tentativeness, of fecklessness with respect to Ukraine will send signals all up and down. And finally, we're getting, we talked about the domino effect before, and the other way that George Kennan talked about domino effect, countries falling into the Russian orbit. Now they're falling away from the Russian orbit. All of its friends, the Syria, it probably won't be able to use those bases. All the bets it made in the Gulf are probably going to go sour, and I suspect that we have to talk to them, but I don't think they're as powerful as they were. But we also have to demonstrate that NATO is going to protect all the other countries in the region, the Estonians, the Latvias, the Lithuanians, and make it very clear that we are part of the single most important part of deterrence, so the Russians don't do this again.
You're the only one I can ask this question to with immense respect for your service. We are 1 year on from the death of Henry Kissinger. What do you miss the most about working day to day with Dr. Kissinger?
I miss his good judgment. He understood the way the world works. He had a dialogue actually with Putin, with Xi Jinping, with the president, Biden, and he did have one with Trump.
Right.
I think Kissinger understood that you have to have effective diplomacy.
Right.
You have to have a steady diplomacy where you work with other countries. You had to be seen to be reliable and predictable. Great powers cannot afford to be misunderstood by their allies or their friends, and he got that, and he also understood you need a strong military to back up your diplomacy.
I got to make some news today. 20 seconds. Have you spoke to Secretary of State designate Marco Rubio?
No, I have not recently. No, I've spoken to him when he was a senator, but I have not spoken since he's been picked.
I could say Hormats. Young Hormats could, go down to state and straighten him out.
Take care.
Robert Hormats, brilliant. Thank you so much. Of course, Vice Chairman at Kissinger Associates. Good to see you this holiday season. I'm late. Bars stomping with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. The suspect who prosecutors say fatally shot United Healthcare CEO last week in Manhattan is fighting extradition from Pennsylvania. Luigi Mangione's defense attorney, Thomas Dickey, said his client intends to plead not guilty to all charges.
The burden's always on the government, thank God, and that's their burden, and they're going to have to produce some evidence, and we're anxious to see it.
Mangione lashed out, shouting, while sheriff's deputies led him into an Altoona courthouse yesterday. Meanwhile, NYPD Chief of Detectives Joseph Kinney said the suspect paid for everything in cash to cover his tracks, but
from looking at his profile, he certainly is intelligent. He thought he could outwit us, and we caught a break, and that's why we were able to bring this investigation to a successful conclusion.
Chief Kinney also says they're still asking the public if they have any additional information to please provide it. 20,000 residents in Malibu, California are under evacuation orders and alerts as a fire burning near the city now spans more than 4 square miles and remains 0% contained. Los Angeles County Sheriff Captain Jennifer Situ says the fire can be extremely unpredictable.
Gather all your important items, documents, and medications in case you have to leave your residence.
Captain Situ says there are no reports of injuries or deaths. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, that was just brilliant. Thank you so much. That Russian question was just dead on with Robert Hormats. He served both parties. That's why I brought up, Secretary Clinton, but that's why I brought up the Secretary of State designate.
Yeah, I mean, Bob Hormats, his career is legendary, in diplomacy. It's great to just get him in studio here.
And his foundation, I think he wrote the last chapter of my book. I can't remember. Now, he literally wrote it on airplanes. He was kind enough to do that. And his whole thing is you can't do state diplomacy unless you've got fiscal policy.
Yeah, strong.
And it's a mess.
Policy. It is.
I mean, it's, whatever your politics, folks, we can all agree the debt and the deficit is gives pause. Futures up 4. We have an inflation report in 45 minutes. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures mixed after stocks fall for 2 straight sessions. Traders right now awaiting CPI data in less than an hour from now. Right now, NASDAQ futures up about 0.1%, 34 points. Dow futures, little change, down 16. S&P futures, little change, up about 4. We have the 2-year yield, 4.16%, up 2 basis points. The yield on the 10-year, 4.24%, and that's up 1 basis point. To currencies, the Bloomberg Dollar Spot Index up about 0.2%. We have the Chinese yuan, that's down about 0.1%. The Japanese yen down nearly 0.5%. The euro and the British pound are weaker. We have Bitcoin up more than 1.5% at around 98,000. Few companies making news. We'll start with Adidas because its headquarters raided by German authorities as part of a years-long tax investigation. And then we go to HSBC, where sources are saying it's weighing cost cuts of at least $3 billion. It also told staff to expect another 6 months of upheaval. And finally, Party City reportedly considering options, including a sale or a potential bankruptcy filing. That's just over a year after it emerged from Chapter 11. That is your Bloomberg Business Flash. Tom and Paul.
What was it? What was the last one?
Party City.
Party City's a company?
The balloons, the costumes, all the, party stuff.
They're like a store you go in?
Yeah,
correct.
You go buy balloons and stuff if you're throwing a party.
I've never thrown a party.
There, obviously,
I can see he doesn't handle those.
He hasn't done the little kid birthday party thing.
I was at a party last night. I'd like to say good morning to the it's a wonderful school, immaculate tuition.
Yes,
it's a great school. Yes. Good morning to everyone that I saw last night listening. Most of them in Bloomberg 1130 New York.
Nice.
Paul, we got to talk about our distribution for 5 seconds. We started this a year ago. And, the cliche is we're blessed where we are. We got a great control room when they're awake. They're like lights out. You get conversations like with Bob Hormats, David Rosenberg the other day. And the distribution is unreal. I got an email the other day, I can't remember if I said this just today, from 160 miles north of Helsinki, Finland.
Whoa. Okay.
I looked, the sun comes up at 9:50.
Right, exactly.
And you get ready for sunset at 2:50.
Yeah, 15 minutes later, sure.
15 minutes later. But good morning.
Right, there you go, power of the internet.
It's this whole new digital thing on YouTube. Subscribe to Bloomberg Podcasts out on YouTube. You can listen to David Gura with Chair Yellen worldwide. You can do that on Apple CarPlay, Android Auto, and, of course, on all the rest of Bloomberg Radio. Gura and Yellen, 10:30 this morning.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
And our look at the front page is the Lisa Mateo moment here on Bloomberg Surveillance. It's always brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. Thank you, Interactive Brokers, for your support. Lisa, I didn't look at your list, but one of the interns said, this is just really something. Go.
But wait, newspapers is now a moment, not an hour? What is going on?
It's a moment. You know, I talked to your PR people. They want to market it as a moment. That was a 2-hour meeting.
I have a new luxury destination that you might want to check out, okay? Luxury travelers, they are heading to this. It's California Soar's East Cape. It's about 45 miles northeast of Los Cabos, that big tourist area. So the East Cape, it's big for fishing, least traveled areas because people like it. It's secluded, okay? But now you start to have these luxury resorts that are coming in. Back in 2019, you had the Four Seasons. They opened their Cosas Palmas resort, 118 rooms, okay? You got fine dining, golf course, but it comes with a price tag. Are you ready for it, guys? You're going to have to pay about $1,000 a night. Okay, that's where it starts at. And they have 2 more ultra luxury resorts coming. Some are offering residences.
So this is the tippy of Baja.
Yes, very, very tippy.
Way down, like
where people don't go.
It's like directly west of Mazatlan, across the Gulf of California.
Yes. So if you don't like to deal with a lot of people in a big tourist attraction, this is the place where they're going.
It's on Sweeney's bucket list, just like that.
It's Sweeney's.
You're going to Costco.
He's booking flights already.
Walking down to Dangerous Provisions, and you're going to go to, what's it called? East Cape?
East Cape, yes.
Good. Nice.
And they're even having residences there that start for about $750,000 for a studio apartment. So
there you go.
You can get into that too if you really want to stay. All right, I'm moving on to Tom Brady. Big Sotheby's auction. Okay, the watches, the sports memorabilia. It all sold. There were about 41 lots for $9 million total. Okay.
Why is he selling this stuff? Does he need cash?
That's a good question because the story doesn't get into those details.
Giselle said you're a little late.
Yeah, exactly.
How many kids does he have? He's got a lot of kids. So here are a few of the standouts. So if you want to go sports memorabilia side, the top one was a football he used to break the NFL all-time passing yards record, but also a University of Michigan jersey that he wore during his final college game. That was top dollar. And then you have, the watches. He has the pricey watches. The Rolex Daytona Paul Newman John Player Special. Over $1 million just for that one itself.
It's a nice-looking watch, but I don't think it's worth $1 million.
It's a very nice-looking watch. Or if you like the custom-made Audemars Piguet. Did I say that right? Hopefully.
I did. Royal Oak watch.
It's out of my price range.
$720,000.
$720,000. He actually wore that during the Netflix roast.
Can I editorial here?
Yeah.
I heard Tom Brady on Fox doing color announcing football 4 or 5 weeks ago. He was so bad I had to turn it off.
Really?
And I turned it on this weekend, and this is typical Brady. He was really quite good.
Yeah,
he's really
I think
improved.
he's good. Now the question I have is he going to continue doing this? Why would you want to work? It's maybe, I don't know if it's that hard. But you got to travel. But now he's an owner. But now he's an owner. That's true. But now he's an owner of the Oakland or the Las Vegas Raiders. So I'm not sure.
He's an owner of the Raiders.
Part owner. It's small.
Yeah. But see, that's behind the scenes. You need to be in the spotlight. Stay relevant.
All right.
That's what it's about nowadays.
Okay. Well, thank you for that Tom Brady moment. I'm loving him on Fox.
Okay. Aston Martin, they're actually better late than never. Okay, they're making their first plug-in hybrid supercar. You have to check this out in the Bloomberg terminal. Good. Yeah, the Valhalla, finally hitting production in 2025. It's about 4 years behind schedule. 1,064 horsepower, top speed 217 miles per hour. Only 999 will be made, so you got to act fast. The price wasn't said, but it's expected to cost more than $766,000. Wow. But, you know, the company's been struggling.
We'll see Matt Miller pulling up into the
He's got to get into that and ride it around the courtyard.
Yeah. Can I just say, in F1 right now, yes. As we speak, Sergio Perez of Mexico, there's this raging battle over what he's going to do with Red Bull. I mean, all these people, including at Aston Martin, are up in the air. It's like Max Fried on steroids. Mm-hmm. That's how I'd put it.
So we'll check it out. I mean, Hannah Elliott at Bloomberg, she works in pursuits. All she does is travel the globe and drive these amazing cars all over the world. And then she has a podcast with Matt Miller, and they talk about cars.
That's not a bad gig.
That's not a bad gig. So I'm sure she will be behind the wheel.
Why aren't we doing that?
I don't know.
know.
Matt Miller, Hannah Elliott, check out that podcast, because if you like cars, that's the one to go to, I think.
I've never forgiven Fargo. He got me into this Formula One thing, and I'm addicted to it.
Ooh.
And they have the Automist watch that you talked about. They sponsor it. It's
of course.
It's like men walking around with $1 million watches on their wrist.
Yep.
That's the kind of thing. You got one more?
Last one. I'll do this one quick, okay? It's a new trend in gift giving because the holiday season is here. Instead of buying gifts, what people are doing is that they're ordering a mix of mystery boxes. They're unopened, unclaimed mail. Where they're getting it, it's not the post office. So these big box retailers who can't figure out and they get things returned and they have all these packages, they actually hire third-party companies to come in and take care of the mess.
Really?
So those companies
are selling them. Mateo Christmas this year? Come on, Costco?
It's a surprise.
You're going to get a big box from Costco with
No, because then you know what it is. But these are like unopened things. So you hand it to somebody and you're just waiting in anticipation, like, what's it going to be? What's it going to be?
All right.
Sometimes it could be a little bit, embarrassing because some of the things you don't know what they are. But this is the new thing. It's the whole element of surprise.
I didn't know that was a thing.
It's apparently a thing. It started during the pandemic because people were bored and these companies had packages to get rid of.
All right.
So. Lisa Mateo, the newspapers, thank you. And that's where we are. We're like 30 minutes away from a CPI report. Markets have lifted in the last 20 minutes. I've got legit green on the screen, ever so slightly. NASDAQ up 0.2%. What was with Facebook yesterday?
I don't know.
It was ginormous.
Yeah.
Last couple of days.
Well,
Is it the advertising thing?
I think it's the TikTok thing. If TikTok gets banned, it's good for Meta.
Oh, interesting.
It's good for Facebook. It's good for Google. It's good for your, YouTube TV, which I know you're all over.
This time of year, you go to 3 parties at night.
Yep.
You just want to go basic music. Tom Petty, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Eventful day, 29 minutes away from an inflation report. Without question, the key economic data of the week. Jay Bryson, Wells Fargo, will be along to interpret that and lots more other decisions as well. In our next hour, from Stanford University, Elizabeth Economy, definitive on China. We're begging her to extend out the conversation. She's got a very tight schedule.
Okay.
You know, it's like,
Will be nice.
we'll have to see. But Dr. Economy will join us as well. And coming up, this is the most important discussion on equities today. Someone who's been in the market but cautious, Greg Bowdle with BNP Paribas, to join us here in CPI Moments. Futures up 5. Bloomberg Surveillance this morning. We're brought to you by Cohn-Resnick. Cohn-Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. We thank Cohn-Resnick for really heritage support of our conversation here, particularly on this great bull market. Let's get right to it from the Interactive Broker Studios. Our Bloomberg Business Flash. She survived newspapers more. Lisa Mateo.
Just barely. Good morning. Yeah, it is CPI day. Investors watching closely the major final read on the economy before the Fed's rate decision next week. So right now we have NASDAQ futures up 0.1%, 34 points. Dow futures little change, down about 5. S&P futures little change, up about 5. The 2-year yield 4.17%. That's up 2 basis points. The yield on the 10-year 4.25%, and that's up 1 basis point. To currencies, the dollar strengthening. That's after a Reuters report that Chinese leaders considering allowing their currency to weaken. We have the Bloomberg Dollar Spot Index up about 0.2%. We have the Chinese yuan down about 0.1%. To earnings we go. We're starting with Macy's. After a delay, it trimmed its profit outlook. It said the issue with that employee who hid millions of dollars in expenses will have a full year impact of $79 million. Gross margin and adjusted earnings per share, its shares are down 10% right now. And Dave & Buster's down 14%. The company reported wider quarterly loss, said its CEO is resigning as well. And finally, shares of video game maker GameStop. They're up about 1%. The company swung into a quarterly profit, and that was thanks to lower expenses. After the bell, we move on to Adobe. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Adobe there will be key. Look for Carol and Tim to have it for you this afternoon. One of the nature, and I've had big arguments over the years about this, only follow people that absolutely get it right, No. What pros do is they listen to everyone and try to find the nuance in the treatment. This is our most important conversation of the day because Greg Bowdle with BNP Paribas Equities Derivatives was a bull but cautious for a while. Re-amend that now. You more than anyone, you weren't bearish, you weren't go to cash, but you're saying, I got worries with this great bull market. We had a great bull market. Greg Bowdle, now what?
It's a similar message where we have these kind of diverging views where one, if you look at positioning or valuation, pretty much any metric you look at, things look stretched. But then when we think about the marginal news flow, is it constructive or does it make us cautious? It probably makes us more constructive. So we have this environment where it feels like things are exuberant, but we think that that trend can continue into the start of next year. But we want to be very careful about how to express that.
Your positioning indicator is at 97 out of 100. That sounds like exuberance to me.
Exactly.
Why am I not taking this off the table?
I'm in triple leverage on cash. I need a 99 before I pull the trigger.
Exactly. Doesn't that tell you to pull back some risks?
What it tells you is that an absolute ton of money has been put to work post-elections. There have been hundreds of billions of inflows into U.S. equity markets, and it makes the equity market more vulnerable to a pullback. But what you need for a pullback is a trigger. And if the marginal data is constructive and you don't get that, you can remain in a very low vol grind higher. But as and when we do get a correction, it could be more volatile.
You know, I look at the SPX up 27, 28% this year. SPW, the equal weighted, I don't know, 16, 17%. So a real divergence there. A, is that normal? And B, should I try to find some of that value in the places where SPX hasn't participated?
I think it's a great question because I don't think it is normal. And I think that there is, I wouldn't say necessarily value in equal weight S&P, but it certainly doesn't have the valuation excess that the market cap weighted S&P has. So one of the themes that we're talking about for next year is the idea that the rally this year that's been driven very much by the mega caps continues to broaden out into next year. And that's something that we've already seen. So what that means is you're paying a less egregious multiple for an earnings market. And if you believe in a cyclical reacceleration, many of the names further down the market cap spectrum are more levered or geared to that.
Tom, make sure that we continue to focus on volatility in the market. Looking at the VIX, for example, we're sitting here at 14. It seems pretty muted at this point. How do you think about volatility going into next year? Because someone would say, with the president-elect coming into the White House, there could be more volatility out there, and you got to be, I don't know, prepared for it, I guess.
Yeah, I think it's a super complicated question. The easiest way to do it is to look back at the last time that we had President Trump come into the White House. And what you saw is it wasn't one regime in terms of volatility. It was several. So you look at 2017, his first year in office. That was the lowest volatility year for the U.S. equity market in 50 years.
Interesting.
But you fast forward 1 year to 2018, and we had this accident in the VIX, this Volmageddon episode where we had a real dislocation in terms of volatility. So we think it's maybe a barbell of super low vol giving way to disorderly breaks higher.
The derivatives, what do the cross moments tell you right now? I mean, you know, we don't do kurtosis on Wednesday, but what does a derivative space tell mere mortals about confidence to invest?
I think it's giving you mixed messages because you look at the realized volatility measures, how much the market is moving day to day. And you look at the market again this morning, and it really isn't. There's this kind of pattern of excess where there's a lot of optionality selling, which is depressing volatility. But then you go and look at some of the more kind of forward-looking measures, and there's probably more of a healthy premium in those option prices than is typical. So I think it tells you that we're in now a very low volatility regime, but people are nervous that that breaks going into next year.
We're going to get a lot of inflation data today and tomorrow, and presumably that'll inform what we see from the Fed on December 18th. What's your kind of Fed outlook behind your market outlook?
So I think BNP Paribas have a pretty interesting view on the Fed going into next year, but if we just focused on the next month, the short-term view is that we get an inline CPI print, and then we get a Fed rate cut in December. And frankly, that's what the market is expecting. So hence, I think it can continue this very low vol approach into the back end of the year. But for next year, the forecast from our economics team is that we don't get rate cuts. So I think if we don't get rate cuts, that's something that introduces a bit of tension into the equity market. We already spoke about elevated valuations. When you look at the reciprocal of the P multiples of the earnings yield for the S&P, it's pretty much in line with 10-year yields. So we think it could be a challenge for equity markets to digest rates if we do see higher rates.
Interesting. So are there any sectors or factors that you guys that maybe screen well for you guys as you think about 2025?
Yeah, I mean, for me, it's really an extension of what we already discussed, which is a broadening out away from mega caps into the body of the S&P, which implicitly takes you a little bit away from things like the Meg 7 and takes you a little bit more into cyclicals. When we think about cyclicals, we do think the risks are higher, but the reward is also potentially higher.
Can I ask a dumb question? You grew up in the Heathrow stacks. You come into Heathrow, and if it's stacked up, you fly over Essex, you fly over Lambourne. Have you ever looked up in the sky and seen like 5 planes up in the air circling?
Probably.
Okay, and then you end up at the University of Liverpool. How'd you go from Essex at the River Thames all the way up to Liverpool? How'd that happen?
Well, there's better football, what you might deem soccer up there, so there's definitely reasons
you went
to be
up there
going up there.
for football.
I went up there for football, and it's generally a nice place to be.
But you have economics, computer science.
Yeah, who does
Talk
that?
to the parents out there right now. Why?
Well, I think economics is the study of what happens in terms of the broader markets, and computer science is really ingrained in everything that we do these days. So why not?
Very cool. Very cool.
I'm with it.
The football's better up there?
I don't know.
Well, when you see what Adele called me the other day about Tottenham, she's pulling her hair out.
Yeah.
I mean, it's like painful this year.
Yep.
I've aged.
This year, last year, I think for many years.
For the last decade. Greg Bowdle, thank you for coming in, and just love the work. U.S. equity and derivative strategy at BNP Paribas. I really can't say enough about the nuances. He's like, I'm in the market, but, and that's a really important attitude, a really important tone as well. Right now, with our news in New York, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. The suspected killer of United Healthcare CEO Brian Thompson remains in a Pennsylvania jail. Luigi Mangione is fighting extradition to New York City. Mangione was shouting while in the grips of sheriff's deputies as he was led into an Altoona court.
And completely out of touch, and it's an insult to the intelligence of the American people. It's a living experience.
Among the reasons cited by New York police for his return, the gun that was said to be found on Mangione at the time of the arrest looks like the murder weapon. Mangione's attorney, Thomas Dickey, urged the public not to rush to judgment, saying his client will plead not guilty to all charges.
a lot of guns look the same. I mean, if you brought a gun in and say, well, it looks like that, I don't even know if that evidence would be admissible.
Attorney Thomas Dickey also says writings by Mangione are not enough to link his client to the murder. President-elect Donald Trump has made another flurry of job announcements. He has selected Andrew Ferguson as the next chair of the Federal Trade Commission, Kimberly Guilfoyle as the ambassador to Greece, and Tom Barrack as the ambassador to Turkey. Only about 2 in 10 Americans approve of President Joe Biden's decision to pardon his son, Hunter, after earlier promising he'd do no such thing. That's according to a poll from the Associated Press and ORC Center for Public Affairs Research. About 4 in 10 Americans said they approve of the way Biden is handling his job as president. Finally, old schoolers, we've lost the last of the trio of this TV show. That is the Mod Squad. The show ran from 1968 to 1973. Michael Cole, who played Pete Cochran, one of the 3 hip young cops, has died. Cole, who also starred on the soap General Hospital, was 84. And Mendelis, the amazing Kreskin, has died. He was big on the old Tonight Show with Johnny Carson. He was 89. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Did you ever meet Peggy Lipton, Michael Barr?
No, I wish I did. I mean, she was a very talented person.
She stopped traffic. I mean, you know, the Mod Squad was like, it was huge.
Yep, absolutely.
It was like, you know.
Late 60s, early 70s.
You know, and Peggy.
I do have memories of that. Good. You know, yeah, you're right. I'm looking at it.
She was married to Quincy Jones.
Right.
Really?
Yeah.
I didn't know that. Holy cow, look at you.
Yeah, very, just what it was. Michael Barr, thank you for that. I'm all flustered, like Mod Squad.
Yeah, exactly. Back in the day.
Back, there was a TV, Lisa, you may not remember this, but there was like a TV. Michael Barr and I we were the last people east of the Mississippi to get color TV as kids. We had black and white TV. Everyone else on the block had color. And we had a Zenith with the little rabbit ears. And you tune it in. In Boston, you'd have 2 stations, maybe 3. And if you got the antenna right, you could watch Bruins hockeys on Channel 38. 4 stations to choose from.
Well, in Trenton, New Jersey, we had Philadelphia stations and New
Nirvana.
York City. The best TV market in the country.
There you go.
Back when there was no cable TV. So you had 2 NBC, 2 ABC, 2 CBS, all kinds of stuff.
Kids today they have no idea.
No idea.
No idea at all. Michael Barr, thank you for that. Futures up 7, red and green on the screen, but we're into this important CPI report. We'll do that in 15 minutes. Stay with us there. Always market moving. The VIX 14.30. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures mix, and this is ahead of CPI data due out in about 15 minutes from now. Right now, NASDAQ futures up 0.2%, 44 points. Dow futures, little change, down 38. S&P futures, little changed, up 5. The two-year yield, 4.17%, up 2 basis points. The yield on the 10-year, 4.24%, and that's up 1 basis point. Few companies making news. Exxon increasing capital spending to $27 to $29 billion in 2025. And then you have shares of U.S. Steel. They are rebounding. They're up about 0.5%, and that was after falling in Tuesday trading. That was after sources said President Biden plans to formally block the sale of the company to Japan's Nippon Steel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. CPI coming up in 13 minutes. Jay Bryson with Wells Fargo will join us. Andrew Sheets of Morgan Stanley will join us. Stuart Kaiser of Citi on the equity markets to join us here in moments. But we got to slip this in. Joining us, Surveillance Europe on $5 a day correspondent Charles Pellet joins us this morning. Charlie, December used to be the off season. What happened?
Affirmative. People leaving earlier, perhaps, for the holidays. That's part of the factor there. And then also, too, just increased demand. Also, you got to keep in mind that airlines have been cutting back on capacity.
Mrs. Keene wants to go to Notre Dame. I try to book it. Every hotel in Paris is booked.
Affirmative. One of the things you might have to do then, stay just a little bit outside, take the train on the way
Fontainebleau?
in. Well, if cost is the most important factor, on the other hand, too, just in terms of your airfares, there are low-cost carriers that you
Charlie,
can get
the last time we went, we stayed in Marseille.
There you go.
What's your go-to, like if you were going to go to Paris with a day's notice, what airline would you book? Do you think you'd try to book a low-cost airline?
You know what I would do? Listen, I'm one of those guys that likes more takeoffs, more landings if I'm flying solo. I would look for a connecting city in Europe, hoping to take advantage of low-cost fares, low-cost carriers to get me there.
Some people go to Iceland and then enter Europe from Iceland.
What's beautiful specifically there, you referenced Iceland with Reykjavik. One of the great things about that is you get a free stopover en route. So you can use that to get a couple of days in Reykjavik.
Wow. Do you fly if you want to save money?
Yep.
Do you save money going out of Philadelphia or Atlanta or Boston versus New York?
Because also time is money. By the time you get there, lowest cost isn't always the best deal. So
Stuart Kaiser's twiddling his thumbs, which is not good.
Let's talk about that.
Where are you going next?
Where am I going next? My trip to Israel got canceled. The airline messed around. I had such a great fare. The fare in both directions got canceled. Up next, Cabo San Lucas. Waiting to hear on that. $105 LA down to Cabo. Wow. Yeah, that's great.
How you do it? How he gets to LA, I have no idea.
Cabo on $5 a day. Charlie Pellet, thank you so much. Greatly $105. San Diego costs more than that. Charlie, let Stuart Kaiser sit down here. If Kaiser doesn't sit down, the bull market's over. Futures up 5. We got an inflation report here in 10 minutes as well. Stuart Kaiser joins us now from Citigroup. How does the disinflation, non-disinflation vector fit into bull market enthusiasm?
Well, I mean, I think both the Fed and the Street are pretty convinced we're on a kind of downward trending inflation, and that sort of takes the upside tail on Fed funds out of the equation, and it kind of supports the soft landing narrative. So I think it's sort of baked into this point.
Where is the money coming from that's driving this bull market?
Honestly, recently, I think, two really important places. One is a lot of foreign equity demand. So I think there's a view of long U.S. versus rest of the world. And second is significant ETF buying. And the ETF buying, I think, really points to the fact that retail, at least post-election, has gotten very actively and aggressively engaged in the markets.
Post-election, I feel it. I mean, I think the sense of animal spirits, risk-taking is certainly out there in the marketplace. Stuart, if the Fed is not going to cut in 2025 as much as maybe we thought 6 months ago, is that a headwind for equity markets?
I mean, our view has always been if you're taking out cuts because growth is strong, that's fine. And I think that's kind of largely what happened in October when we went down from, let's say, 6 to 3 cuts or something like that. So to me, it really all boils back down to the economy. If you're getting cuts priced out because you're getting 227K of labor market growth, and then you're getting easing inflation, I think you're fine. If you're pushing out those cuts because of deficit or tariff or fiscal spending reasons, that's a totally different discussion.
But has any client ever called up your desk and said, I'm worried about deficits?
There are people that worry about them, but I think they realize that it's not a here and now risk to trade, right? I mean, that's one of those sneaky things, which is it's a massive risk, and it just sort of pops up out of nowhere, and you decide to trade it. If there's a time we're going to trade that, it's probably what I would call phase 3 of the election reaction, which is implementation early next year. So post-inauguration, when we get actual budget proposals and tax proposals and tariff proposals, that is a window of time where you could start to trade that. But for now, it's a big thing on the back burner, I guess you'd say.
Yep. SPX up 26, 27, 28%. SPW, the equal weighted, a lot less than that, 16, 17%. Still good, but so is that a healthy kind of marketplace, or are you concerned about that?
Early in the year, we really liked the broadening trade. To be honest, we were way early on it. It really didn't start working until over the summer in the third quarter. And I think what made it work is you actually saw broadening out of actual earnings growth. So I think the reason it's underperformed is because for the first 6 months of the year, you had very narrow EPS growth, which meant you had very narrow leadership, which favored cap-weighted S&P. The back half of the year, you've started to see a broadening out at EPS, and you're starting to see that equal-weighted and smaller cap trade perform well. So look, big picture, no, it's not healthy to have super narrow leadership if it's coming from very narrow EPS growth. Hopefully next year we get both of those things to broaden out, and I think that would be very healthy for the markets.
I know it's off your watch, but is Wal-Mart, which frankly looks like Bitcoin, is it tradable? I mean, what does a big bank do? I mean, I get securities analysis, 3-year buy and hold on Walmart, but if you're shorter term that, what do you do with a moonshot like a small cap like Walmart?
That's what I'm saying. Look, I think what you have to do in that case is just kind of respect the momentum and try to understand the dynamics that are driving it, right? Which is you have a lot of trade down, which has benefited Walmart. You have amazing execution and a good product offer. I think for Walmart, you just have to look at it as this is a winner in the space. And until
How do you know when to get out of a winner in this space?
Look, I think it's a good question. I would say let's think of something that's a beat and raise type story. The beat and raise, beat and raise, beat and raise. When they beat but don't raise is probably the time you want to get out of that stock.
Yeah, 7 minutes away here from the inflation report. The date calendar. Ira Jersey to join us in moments here with really pro analysis of fixed income into our economy. Jay Bryson, Andrew Sheets down the road as well in this 8 o'clock hour. Paul?
Stuart, as we think about 2025, are there some sectors that people are going to say Citigroup's recommending this sector? I mean, what do you guys think about 2025?
It's a good question. I would say, look, the sector that's working the best right now is banks. There's no way around that. I think people view that as having some lasting power. The two other sectors that I think are very much in debate, not exactly your question, but I think I'll go that direction, are healthcare and energy, frankly. Healthcare, you're seeing a lot of the RFK Jr. stuff impacting the sector at the top level. You have a lot of people trying to hide out in medical technology, and then another group of people trying to understand the M&A cycle that we might be seeing and how it impacts biotech. Energy is sort of the opposite of that. You saw OPEC cut a bunch today. So you've got this sort of downward pressure on oil prices despite Trump supporting oil drilling activity. So I think you want to be in things like pipelines and servicers, which benefit from activity more than they benefit from the absolute price of oil.
One more question. We got to get to Ira here on the inflation report. It gets in the way of our discussion with Stuart Kaiser. I mean, Stuart Kaiser, Citigroup, is like the romance of billions or the romance of industry. I mean, he's on the trading desk and it's all that.
Big trading.
What's the level of exuberance that's out there right now? Is it, I mean, with your years of experience, is it like the silly season? Is it subdued? What's the effervescence that you see, not just at Citigroup, but on the street in general?
Look, I think bullish sentiment is very high, but you are starting to get some questions asked, if that makes sense. Some questions asked about positioning, about valuation, and about the bullishness in the EPS forecast. So without a doubt, you have a very bullish investment community that's now been buttressed by retail flows. But you are getting people asking some questions, which suggests to me you do have a little bit of cautionary behind the very bullish tone. But I'd say you're probably like an 8 out of 10 or so in terms of bullishness right now.
You mentioned international investors coming to the U.S. market. I've heard of that a lot in the last couple of months. Why are they coming here other than, I mean, because we're so much more expensive than the UK or the European markets. Are they just saying, I just have to be where the performance is. I have to be where the growth is.
Yeah, I think there's two things. I think you have, sort of a U.S. exceptionalism on the growth side, but more importantly, what you have is U.S. exceptionalism in terms of large cap growth and tech stocks.
Yeah.
If you want to access that theme, there's really nowhere else globally that you can find those stocks to invest in. So I think we're benefiting both from the economy and also from a little bit of a unique makeup of the equity markets that's really attracting
And
people.
for a lot of investors, myself included, tech has been the leader for markets as long as I can remember. Is that still going to be the case going forward, do you think?
I mean, I think right here, sitting here today, you have to assume that tech is still your leadership going into early next year. What could trip that up a bit is what Tom mentioned and you mentioned before is you get a broadening out of EPS growth, which means you can sort of own a wider swath of stocks. Our view is kind of you buy what's scarce. When earnings growth is scarce, you buy growth stocks. When attractive valuation is scarce, you buy value. It does feel like we're on the valuation side of that maybe now going forward.
No one listening owns anything but Apple and Mag 7. What do you do with, NVIDIA, Apple? Is there a Stuart Kaiser theme, or do you just go with it?
I think you still run with it. I think there's a couple stocks in there that maybe you're a little bit more incrementally worried about political risk from. And Meta would probably fall in that category. Google maybe a little bit because of the lawsuits going out there. I think what we've seen this year is almost every quarter there's been a favorite within the Mag 7s, and then there's been a couple
shifts.
Yes, it does.
Yeah.
There are shifts within there. And a lot of that has to do with product cycle. And Apple is probably on the front foot a little bit with the product cycle right now. And that's going to be a favorite. Obviously, NVIDIA with the Blackwell chip has a product cycle. So those are probably the two we're maybe a little more comfortable with.
This is a more interesting conversation that we're going to have with Ira Jersey, but we got to go do the CPI report.
Sounds good. Thank you all.
Stuart Kaiser, thank you so much. I'm sure we'll see you before the end of the year with Citigroup. Stuart Kaiser, they're joining us now. Just off the breakfast, the latte. I think at least Ira had a mimosa here before inflation report. Ira, what's the nuance? What will you look at on the Bloomberg screen to observe market reaction here in 2 minutes?
Well, for the market reaction, I'm going to be focused very heavily on what 2-year yields do, because I don't think 10s are going to move a whole heck of a lot on this one way or the other. But 2-year yields are going to be a gauge of how aggressive or not or unaggressive the Fed will feel need to be based on whatever the numbers come out, right? So a 10th higher, and you'd expect a sell-off, a 10th lower, and you expect a bit of a rally in 2-year yields.
I did a log core CPI chart today. Just simply, Ira Jersey, it's not even convex to disinflation. There is not a core CPI disinflationary vector. Are we going to get that today?
I don't think so. I think that we'll probably continue on this path of, call it 2.8 to 3.5% core CPI. Look, services, like when we look in the details and when, all of these headlines come out, one of the cool tables that comes out on the terminal is a breakdown of how have services done as well as durable goods and non-durable goods. And that services part of inflation has really been driving things. And that's driven largely by wages. And we know that wage growth is still held up reasonably well.
We're going to have to see here. Ira Jersey with us, less than a minute away from the CPI report. We'll continue with Mr. Jersey here, not only on that 2-year yield. Let me do that now. Let me see. Paul, I can do that to 4 digits. 4.1616%. A little bit higher yield here, but sort of in the vicinity of a 399. I don't, the drama here of a lower yield. I don't think we're going to get that, but we'll have to see. I got green on the screen. Futures up 8. Dow futures go the other way. I don't know which component is off today, but they're off. Macy's had a tough morning.
Yes,
as we saw. And Oracle the other day. NASDAQ up 0.3% here. And the VIX just simply churning at a 14.24. Again, the inflation report of the nation folding into the PCE guess of the Fed. Let us listen to Lisa Mateo.
This is breaking news from Bloomberg.
And the numbers coming in, and they are right on target. We'll start with CPI month over month for November. The survey was for 0.3%, came in at 0.3% on the dot. When you take food and energy out of the picture, the numbers remain the same, 0.3%. We go to year over year, 2.7%. That was the expectation. Came in right on target at 2.7%. The prior was 2.6%. Still waiting for revisions right now. I'm guessing that's correct. It's right on target for both of those. We want to get to the reaction. So let's see. Now we've we've got green across the screen. We have NASDAQ futures up 0.3%, 77 points. Dow futures up 0.1%, 48 points. S&P futures up 0.2%, or 15 points. Ira Jersey said, go to the 2-year yield. Here we go, 4.14%. That is little change. The yield on the 10-year, 4.23%, and that is little changed as well. We'll send over to you, Tom and Paul.
Equities get a sigh of relief. I mean, did you see how she did that? Perfect. She nailed it. Karen Moscow couldn't do that.
I don't know. They're all good.
She went to.
Looks like the Economist got it right here.
So, I think for 2025, we got Lisa to quote the yield to 4 digits.
Yes.
I think that would be, something good to do.
We'll see.
We welcome all of you on YouTube. We're giving a few moments here for Ira Jersey to digest the report. And again, as Lisa said critically, we do not see the revisions to those 4 key lines of inflation data on a headline and on core CPI. They all came in on target. But the revision, will be important. I got average inflation adjusted average hourly earnings, weekly earnings. They come in a little bit light. Don't want to make too much of that. And as Lisa mentioned, the equity markets give a lift here off the data. I had a 13 handle on VIX, now 14.00. Completely unfair, but we go to Ira Jersey when we want to be unfair. Ira, at this point, can you glean the service sector dynamic, or does that take another half hour or hour?
Oh, it doesn't take another half hour. I jumped into the real hourly earnings numbers, though, Tom, because one of the big drivers of all of these spending gains and that we've seen and what's kept driving up GDP and industrial production and all of these other things that we look at in order to gauge how the economy is doing has been earnings and real earnings. And real hourly earnings were still up in November by 1.3% on a year-on-year basis, which is a little bit lower than it was in October, but just by 1/10. So that's really not a bad number at all. Which basically means that people are making more money than they're paying for goods and services. So that's a positive for the economic outlook going forward. That didn't drop very significantly at all.
Red headline just crossing the terminal as well, just at the same time as the CPI. Albertsons terminates merger pact with Kroger. So much for that grocery store merger there. We'll have more reporting on that coming up.
This goes right into Ira. This is important because I'm not going to go into it now. It's too important to talk to Ira Jersey and Andrew Sheets. But they lift the dividend. They do a share buyback. Happy. This merger didn't work out. And Ira, that goes again to my core theme, which is America adjusts. Corporations adjust to the cards they're handed. If we have a disinflation, even if we stumble here, how does the bond market adjust to that economic reality?
Well, if we have a disinflation, then I think the first order effect is a steepening and a bull steepening of the yield curve. So 2-year yields go down faster than, say, 10-year yields or 30-year yields. And the reason for that is that the Federal Reserve will have the ability to cut more than is currently priced into the market. Keep in mind, we're only pricing for the Federal Reserve to cut another 3 or 4 times. So we're only talking about another 75 or 100 basis points of rate cuts by the end of next year. And that's a meaningful change and shift from where we were 3 months ago when the market was thinking before that September payroll report that we received on October 3rd. Before that, we were expecting the Fed to cut down, another 150 or 200 basis points from here. So I think that's the first order effect if we get the disinflation, but it doesn't look like it. And I have that services number for you, Tom. So that was up again 0.3% on the month for 4.5% year on year in terms of services inflation. So still services is still driving almost all of this. You look at the good sectors are actually negative, right? In some cases. And that's so really we're 65% of our consumption basket is services, and that's still seeing reasonably decent inflation and increases.
Right. Ira Jersey, thank you so much. We're going to get to Andrew Sheets here as we can. Headline out. Well, this is not a headline. This is a press release I have not read from Albertsons. Albertsons files lawsuit against Kroger for breach of merger agreement. I have no idea what that is. but nevertheless, there it is. With the share buyback, with the dividend lift, as they take in money from Kroger for busting this agreement, the stock doesn't lift. The stock's off fractionally here right now. We'll have much more on this breaking story of groceries, particularly Good Morning out west on your commute across America. Andrew Sheets with us now with Morgan Stanley. We're thrilled that he could be with us today. Andrew, the first thing I did in honor of your Brown University mathematics is I took core CPI, the series, not the year over year, month over month, the series, and I don't have a first or second derivative convexity towards disinflation. Does Morgan Stanley see disinflation in place, or can you not say that after the report?
Yeah, so we do see disinflation in place, although not yet. Inflation is still holding up through the end of the year. Where we, I think, are a little bit more optimistic on inflation than the consensus is next year, where we see inflation coming down. And I think importantly, it's really coming down in the first half of the year, where for the incoming Trump administration, we think it's going to be a case where policy has kind of fast announcement but slow implementation. You don't get the inflationary effects of tariffs, of immigration changes until kind of in the back half of 2025. And in the first part of the year, we think that a lot of the inflation, which is being driven by shelter, auto insurance, that can come down, that those series are running kind of well ahead of where the real economy markets for those are, and that some of the difficult seasonality in January and February, which previously has boosted inflation, we think that actually sets an attractive bar that might make it a little bit easier for inflation to be a little bit better than expected. So we do see inflation coming down. We see that disinflation the first half of the year, and we think that will mean that the Fed cuts not just this month, but in January as well.
Is that so? Get a sense there, Andrew. Where out there are you suggesting your clients really think about adding some risk, if anywhere, as they think about 2025?
Yeah, so I think as a house, I think we are more optimistic than consensus on duration. We think that bond yields will fall. We think that fall will be concentrated in the first half of the year as the Fed ends up cutting a little bit more than expected, as inflation falls a little bit more than expected, and as I think some of the inflationary impacts of policy change take longer than expected to develop. And I think an important part that our interest rate strategists have been talking about, but it also applies to credit, is fixed income markets have been operating under this very difficult environment of a very flat or inverted yield curve. There's been very little carry in the asset class. If the Fed continues to cut as we expect, if the ECB continues to cut as we expect, we think the European Central Bank will take policy rates down to just 1% by the end of next year. That's going to provide, I think, a much better carry environment for fixed income and be supportive of duration.
Credit risk. How much credit risk are you suggesting folks take here these days, given that the 2-year Treasury is at 4.12%?
So I think credit's also a story, I think, of a little bit of a better first half and then maybe a more challenging second half. So spreads are low. I don't think this is a case where ourselves or really any credit investor is loading up on a large amount of credit risk. But it's also one where I think you have to be kind of careful about timing that short or timing that underweight. The credit, we think, can remain somewhat tighter for longer than the market's expecting. So we're expecting U.S. credit spreads, European credit spreads, to actually be a little bit tighter by the middle of next year and then maybe have a more difficult second half.
Andrew, just one final question here. It's too short a visit today. We want to get you on for a much longer chat as well. You're sitting over the holidays and you got family members going, Andrew, we don't understand your world, but is capitalism, is finance in place? Is this a normal time?
Well, I think what we are looking at is a much wider range of outcomes looking ahead. And I think the new incoming administration increases the odds of boom and a larger capital market rebound. And it increases the odds of stagflation, of weaker growth and higher inflation. If you look at Morgan Stanley's economic outlook, our strategy outlook, which we published a couple of weeks ago, you'll see that in our forecasts. You'll see that in our numbers. You'll see that in this wider range of outcomes. So I think we are moving from a very moderate outcome, which was outstanding for credit and good for the equity market as well, to something that's a lot less moderate. And it might not be bad. It might be good but it's a wider range of outcomes that we're dealing with.
Too short a visit. Andrew Sheets, thank you so much. We'll do it again. Morgan Stanley today here after the inflation report. Jay Bryson coming up from Wells Fargo as well. There is a lift to the market, up 0.4%, up 21 on SPX futures. NASDAQ up 0.5%. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The suspect in the fatal shooting of United Health Group executive Brian Thompson is fighting extradition to New York, where he faces charges including second-degree murder. We get more with Bloomberg News senior editor Bill Ferries.
Still a lot of questions in this case, but fighting that extradition gives Mangione a chance to perhaps look for a stronger legal team in New York if that's what he wants to do. And it also allows him to avoid going into Rikers Island, the prison right now, which is most likely where he would be sent if he waived extradition and went to New York.
Bloomberg News senior editor Bill Ferries. Luigi Mangione is charged with shooting Thompson outside the Hilton Hotel in Midtown Manhattan. He was arrested at a McDonald's in Altoona, Pennsylvania, with a homemade gun, a pile of cash, and a manifesto decrying the healthcare industry. His attorney, Thomas Dickey, says, though, that's not enough to link his client to the murder.
There's a rule of completeness, so you have to take any writing or any document in its entirety because some things can be taken out of context.
Thomas Dickey spoke on ABC's Good Morning America. Firefighters have been battling the Franklin fire in Southern California, but little progress has been made because of the strong Santa Ana winds and dry conditions. About 20,000 residents in Malibu remain under evacuation orders. A federal judge in Texas has rejected the auction sale of Alex Jones's InfoWars to the Onion satirical news outlet. The judge criticized the bidding process as flawed, as well as the amount of money that families of the 2012 Sandy Hook Elementary shooting stood to receive. The decision is a victory for Jones, whose conspiracy theory platform was put up for sale as part of his bankruptcy case. It is in the wake of the nearly $1.5 billion that courts have ordered him to pay over falsely calling one of the deadliest school shootings in U.S. history a hoax. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Our economic indicators, all the great coverage from Michael McKee, Lisa Mateo, and all. Brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth. With advisor-centric support, future-ready technologies, grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. And we thank Commonwealth as we do. Paul, in 30, 40 years, I've never seen headlines like from Albertsons.
Yeah, they're not happy. No, they're not happy here. So
it's just wow.
You know, you saw this deal from day one. You say, okay, I guess they're going to have to just divest certain stores in certain markets, and that'll be it. And I would think they would have had clear advice before they, even launched this deal where they would have to divest. And there you go. But apparently, it wasn't as clean as that. So
we'll give you a good conversation on this. Our team of interns. Do you know the interns work this late into the party season?
I didn't know that.
It's amazing.
Okay, very good.
We're African experts on Albertsons and Kroger right now. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a lift to the markets, and this is after U.S. core inflation for November stays firm with a fourth straight 0.3% increase. Right now, we have NASDAQ futures up about 0.5%, 127 points. Dow futures up 0.2%, 100 points. S&P futures up 0.4%, or 24 points. The two-year yield, 4.12%. That's down 2 basis points. The yield on the 10-year, 4.23%, and that is little change. To commodities, we have oil edging higher. Brent crude up more than 1%. $73 a barrel. WTI crude $69 a barrel. That comes after OPEC makes its deepest cut yet to its 2024 world oil demand forecast by 210,000 barrels a day to 1.6 million barrels a day. Few companies making news. We've been talking about it. Albertsons terminated their 24.6 merger pact with Kroger. It's filed that lawsuit against Kroger for a breach of contract. And that comes after the deal. It was just blocked by that federal judge who said that takeover is going to lessen competition for the grocery shoppers. Kroger's little change. Albertsons down about 1.5%. Mondelez approved a $9 billion buyback. Comes after reports that the company was looking to buy Hershey. So now you have Mondelez up 4%. Hershey, which was up yesterday, now down about 5%. And finally, Eli Lilly offering vials of its weight loss drug Zepbound through Rose telehealth platform. That's giving patients a more affordable option. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Did we book Bryson to talk about Belichick going to UNH?
I think we did.
UNC, rather?
He gets it's bad enough to get your undergraduate degree in North Carolina. Then you double down with
You double down and get the PhD at Chapel Hill?
Yep.
So I can be around for lots of national championships.
Jay Bryson joins us right now. That would be so cool if Belichick, whatever college, frankly, but at Chapel Hill, that would be amazing.
Yeah, I think it's great for recruiting, right? If you're a high school kid and you have NFL aspirations, you want to go play for the guy who's won lots of Super Bowls, right?
You've been driving Wells Fargo Economics for years. You and the what was his name? Sylvia of Fall River. Sir John Sylvia of Fall River. You guys nailed the optimism coming out of 08-09, unemployment 10%. Wells Fargo said, you know what? It's going to get better. What's that overarching 60,000-foot Bryson Sylvia theme right now?
Tom, I think it's lots of uncertainty, right? It's lots of policy uncertainty. If we have lots of tariffs next year, that's a stagflationary hit to the economy. Stagflation with a small s, right? This is not big S stagflation, the 70s that you and I, kind of lived through.
Not
right?
Paul.
But, it pushes up CPI. It takes down GDP growth a little bit. And so I think further out, 2026, if you have regulatory changes, if you maybe get a little bit of fiscal stimulus, that's good for 2026. But I think 25, it's all about potential tariffs. And what does that do?
What did you think of the inflation data that we saw today? For the Economist, got it right, spot on. Every once in a while.
So I'll use a British term. It was kind of a damp squib.
Okay.
It was kind of as expected. Nothing to see here. I think in general what it does is the Fed will probably cut rates next week, right? But I think the question is further out, and so if you look at the core CPI. You annualize it right now. We're still running north of 3%. Mm-hmm. That's not 2%. Right. And I understand CPI is different from PCE, but even if you look at PCE, that's still 2.75% right now. And so I think they're really going to slow down the pace of rate cuts next year.
What is it about 2%? I don't remember ever that being a thing in my lifetime. I mean, today it feels like inflation, the rate. I don't know. I know we're at higher levels overall when we walk down the supermarket aisles and everything. But the rate of inflation seems reasonable at this point. Yeah,
it's 3%. Right? But the issue is they've been in this 2% camp for years now, right? And so if they came out and they said, we're not at 2%, but we can live with 3%. Then the market starts to say, okay, if you can live at 3%, well, what about 4%? Yeah. And what about It becomes a slippery slope. Yep. And so they've kind of backed themselves in this 2% corner, and they got to get into the 2% corner, I think.
So what does this all mean about the consumer? Do you have concerns about the consumer? I mean, we're getting into the holiday season right now, smack dab into it. The retailers are putting up okay numbers, I guess. How do you feel about that?
I think in general the consumer is okay right now. Are there pockets of weakness? Yes, right. We saw credit card delinquencies really go up. Now that said, it's starting to level off. We saw delinquencies on auto loans starting to go up. So are there pockets of consumers out there who are feeling stressed? Yes, but that said, there always are. And if you look at in aggregate the household sector right now, whether it's debt to GDP ratio, you look at debt service ratios, they're all at decade lows right now. And so in general, the consumer sector is doing okay.
But the key phrase there is in aggregate.
Mm-hmm.
Can economists in this divided, polarized America, I saw Merriam-Webster, I think their word of the year is polarization. In this polarized two Americas, can we aggregate?
Well, so I guess, Tom, what I would say is, for an economist, as long as income continues to grow in aggregate, I'm going to use that word, that's, consumer spending continue to grow, and the economy will continue to grow. Now, if you have lots of inequality out there like we do right now, if there's lots of houses that are struggling, that's more of a political and social effect, I think, that then has economic effects, potentially could have economic effects later on.
Is disinflation in place? I mean, we're assuming a Fed rate cut December 18th, right?
Right.
How do we do that? We had Ira Jersey on. He's modeling, I don't know if you've seen this, but 4.5-ish service sector inflation. We're cutting rates into that service sector inflation?
Right. What we do have is, and I haven't seen the year-over-year numbers in terms of core goods, right? But what we've had is, up until at least November, we had actually deflation in goods, right? And so the Fed is, now if that's where the tariff thing comes in, right? If you put tariffs on goods, that's going to cause those prices to go up. And if you're in a service sector that has a 4% inflation rate, then you're not getting the 2%.
Could we get the big long pause? I mean, Paul, is what we're talking about here is months and months of meetings and meetings of pauses, right?
I think knowing what I know right now, I would say I think they're on hold in January, right? Just to digest things. And then it's really going to depend on how policy rolls out from there.
What's your real GDP call for 2025? Is growth slowing, but we're still getting reasonable growth?
And it's because what we are assuming, we're not assuming that you have 10% across the board tariffs and 60% on China. We're kind of taking half of that, right? And we're saying it's probably going to happen in the second half of the year. So on a annual average basis, I think we're at 2% for next year. If you look at fourth quarter over fourth quarter, then it's slower than that. It's about 1.5%. And the point here is, given that assumption, what we have is really weak growth in the third and the fourth quarter of next year, because that's a hit to purchasing power, which then slows down consumer spending.
Jay Bryson, thank you so much. With Wells Fargo, thrilled to have you in the studio today. We'll see the publication of Wells Fargo after this important inflation data to the December 18th Fed meeting, I should say, and we'll bring that to you. Again, we protect the copyright of all of our guests.
And Wells Fargo got its broker-dealer license from my firm, Wheat First Securities, Richmond, Virginia.
Really?
They'd still be writing mortgages if it wasn't for my firm.
Really?
Trading
I used to
stocks and
read Wheat First Securities, Richmond, right?
Yeah.
We used to read it voraciously.
Yeah,
It
good
was
stuff,
really quite good. Okay, now we got a problem here. Folks, you don't understand the show. Michael Barr, Lisa, and I, we live vicariously through Sweeney, because Sweeney's checked every bucket on the bucket list. Section 3, row 6, seat 15, Billy and Stevie, August 8th, MetLife. Billy Joel, Stevie Nicks. You're back like, 1, 2, 3, 4. It's a Sweeney seat. I mean, you're back. It's a Citi XAE card member official platinum. You have that
I think
card.
I got to be that, yeah.
You probably have that card.
I'm sure I do.
And they're only clocking in at like $400 large.
Oof.
I mean, I thought it'd be thousands.
They're going to put 70,000. I don't do stadium tours.
Oh, you
anymore.
don't?
I don't do stadiums. I'm too old.
Even if it wasn't Stevie?
No. I mean, Bruce, I'm like, you go have it. I'll wait till you come back to the garden. So.
Okay, so you got to be indoors.
Yes.
Yeah.
Okay. Or PNC Arts Center. I'll go see anybody at the PNC.
It's amazing how sold out it is. I mean, it's
awesome.
like gone already.
Yeah. So he's done doing Madison Square Garden, but he's still touring and selling out like all over the world. this
yeah.
dude.
I mean, that's what
So-
you do. And he's got Sting opening, this dates that.
Sting opening?
Yes, Sting is opening for Billy Joel. And
Sting doesn't open for anyone.
the slacker Stevie Nicks, she's opening for Billy Joel, which is a good thing.
Yeah, all right.
She'll be there with Waddy Wachtel. Stay with us into the 9 o'clock hour on China. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr. Michael Barr's still with us.
I believe he is.
He's here for the
I
hour.
believe he is.
Very good. Lisa Mateo, always still with us. We say good morning to you across
Get rid of it.
the nation, around the world. We've been emphasizing Finland.
Yep.
Listeners north of Helsinki, that's a good thing. Good evening, I should say, in the Pacific Rim. We're on YouTube. The distribution for that, go to YouTube. And you go to Bloomberg Podcast. You subscribe to Bloomberg Podcast, and there we are. Lisa and three other thugs. A little chiclet thing. It's called a chiclet. That's
Okay.
That's what the digital.
All right.
The young Turks of digital
Very
say. Lisa looks great in a chiclet. Tom, not so much.
Not so much.
Anyways, YouTube, go there. Now we're off of CPI. The market lifts, Paul. There's no other way. Why?
Yeah, we got the SPX, S&P 500 up about 0.4%. The NASDAQ, Tom, up about 0.6%. Yields coming in, we're at 4.21% for your 10-year.
Indeterminate. I look at the 10-year real yield, 1.92%. Maybe that's a statistic that Dennis Coleman looks at. He's with Goldman Sachs. Our chief financial officer. We're going to go to him in 9 minutes for a conversation with Stanley, the CFO of Goldman Sachs. More important conversation before that with Emily Rowland. We'll get to that in a moment. From the Interactive Broker Studios, our Bloomberg Business Flash. She's shopping at Albertsons. Lisa Mateo.
Right. Good morning. Well, we have this futures report brought to you by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've got a nice lift to the market. This is after U.S. core inflation for November stays firm. We have NASDAQ futures up 0.6%, 136 points. Dow futures up 0.2%, 93 points. S&P futures up 0.4%, or 25 points. The 2-year yield, 4.11%. That's down 2 basis points. The yield on the 10-year, 4.22%, and that is little change. To currencies, the dollar strengthening after that Reuters report. Chinese leaders considering allowing their currency to weaken. We have the Bloomberg Dollar Spot Index, little change right now. We have the Chinese yuan down about 0.1%. Earnings after that delay, Macy's trimmed its profit outlook. It also said that issue with the employee who had millions of dollars in expenses will have a full year impact of about $79 million on gross margin and also adjusted EPS. Its shares down 11%. Dave & Buster's down 13%. The company reported wider quarterly loss, said its CEO had resigned. And finally, I have a surveillance correction. Earlier, I said Hershey was up yesterday when I was talking about the Mondelez $9 billion buyback. Well, I thought today was Tuesday, so my fault. Shares of Hershey were down yesterday, still down this morning about 5%. That is your Bloomberg Business Flash.
You got 50 weeks into the year,
and I got the
for
wrong
your
day.
first mistake.
Oh, that's
it's
fun.
unbelievable.
Yeah, we're gonna celebrate
correction.
Do you know that Sparta keeps a list of all my mistakes on a daily basis?
What's the running total?
The running total is 3 Bic pens. He's got the little, we're saving money. He's got the little Bic pen we had when we were kids. He's run through 3 of those.
There you go.
Listing all my folks' paws and all that. Joining us right now, again, an important conversation. We talked about Greg Bottle at BMP. He's been very cautious, reticent. That's a view to take if you're cautious and reticent. And Greg Bottle, to his great credit, has been in the market. Emily Rowland hasn't been cautious and reticent. With John Hancock Investment Management, Emily Rowland has killed it this year. Killed it by just saying, buy quality, buy big, stay long. Emily, do you commit to that into 2025?
Yeah, we do, Tom. And what we're seeing right now, though, is this sort of speculative frenzy that's continuing to build in the markets. And I think the response to the CPI report this morning was evidence of that, as you see small caps surging, Bitcoin, still near new all-time highs. And I think markets are feeling a sense of relief that there wasn't an upside surprise on inflation, but we still want to be invested in risk assets here. But we are seeing people, I think, going a bit over their skis here in terms of this rotation into the most speculative areas of the market. So we would trim into that. But we still, again, want to embrace high-quality U.S. stocks.
Paul,
into next
over
year.
your skis is Eastern mountain skiing, not
That's
the
right,
fancy
yeah.
Western stuff. Nobody's over their skis out at Vail or Copper Mountain.
Exactly right. That's the blue ice of the East that we all grew up on. So, Emily, what do you think our Federal Reserve is going to take away from the inflation date print we saw today, which was right smack in line, and what we might see tomorrow from the PPI?
Yeah, so if you look at what the bond market is pricing in, we saw the probability of a December rate hike shoot up right after the CPI report to about 98%. So I think we're going to see the Fed cut. I actually want to say hike because it does seem odd that the Fed is cutting in this environment where inflation is still not back down to the Fed's 2% target. When a duct tape banana is selling for $6 million, it doesn't feel like the Fed should be cutting. So I almost have to correct myself every time I say it. But I think they will go ahead, given that, the Fed funds rate is too elevated in their view, given the level of inflation today. But I think 2025 remains in question. And I think there's probably a pause as we start the year, and then we'll have to see how the data come in. But I think December's a lock at this point.
So with that backdrop there, on the fixed income side of the world, are you taking credit risk here?
We're not, just because high yield bond spreads are so remarkably tight. We're sitting at 260 basis points above treasuries. There's only ever been a couple of times where spreads have been this tight. 2007 and 2021 were really the last time we saw this. So it's hard to see much value. It's hard to see investors really getting rewarded for taking risk down in the credit spectrum. We do have a core plus type positioning in our outlook. We like things like investment grade corporate bonds, mortgage-backed securities, treasuries. We would sprinkle in a little bit of credit there with an active manager, but broadly it's a boring bonds that I think can do some more heavy lifting into next year.
Emily, the official Tom Keene radar is up, and I'm not talking about the Red Sox inability to do anything while the Mets and the Yankees bring in value. I'm talking about double-digit earnings growth. That's not the way the world works. Do you have forget about 13%. Do you have a confidence in 10% earnings growth next year at John Hancock?
I think there's parts of the market that can deliver on that.
Of course.
But I think
Oh, come on. Microsoft's going to deliver. Next.
Yeah, exactly. But yes, the bar is high. On top of that, we're sitting at 22 times forward earnings. We just wrote our outlook for next year, and we started by saying, let's just celebrate what just happened over the past 2 years. We just got almost a 50% return out of the S&P 500. all of that was on multiple expansion. In fact, earnings per share for the S&P 500 are now lower than they were a couple of years ago. So we've got to take stock at the fact that we've seen this incredible multiple expansion. So I don't think we get more of that into next year. I do think we could see decent earnings growth, but again, 15% is a high bar. So we're coming into the year at a really tough starting point. I think you can be very selective and get areas that are going to deliver on that. We still like US over international. We still like quality. We're looking at mid-cap stocks to sort of protect against the valuation risk that's inherent in larger cap companies. But I do think bonds have more value in them into next year, given this backup in rates that we've seen and the fact that the bond market's just not sniffing out some of these more disinflationary trends that we're seeing.
Emily, did you and your team up there at John Hancock, did you change your investment thesis, outlook, expectations, given the election and kind of maybe how policy may change beginning in January?
We haven't. We think it's a really tricky way to invest. You can do it on a tactical basis. We looked back at the 2016 playbook, for example, and we saw really similar moves. Things like regional banks surging. They were up about 40% after the 2016 election based on this idea of more deregulation, more pro-cyclical policies, tax cuts, et cetera. Small cap equities similarly surged. There was a massive backup in 10-year bond yields. Those moves lasted for a month, maybe 2 months, but then they faded and those trades moved sideways. So we want to be really careful about some of the knee-jerk reaction that we've seen to the results of the election. I have never used the word potential more, potential this, potential that. We still don't know. So we want to be mindful of those moves, and we want to look at the fundamental backdrop. We want to look at the macro backdrop as really being the key inputs to cross-asset positioning.
Emily, got to run. Got to get you in longer next time. Come down to New York, and we'll do that. Emily Rowland with John Hancock. Boston, good morning from Mount Katahdin down to Block Island this morning. I got a headline, Paul. You're working this better than me. Apple working on AI chip with Broadcom?
Sure.
Say what?
Why not? I mean, you feel like Apple needs to maybe get more in the game on AI, which is the expectation that they absolutely would. And here's a move here. So Broadcom stock, this is really good for them. They're up about 5% pre-market trading for Broadcom.
Should we talk to our top lawyer at Bloomberg Intelligence?
We've got
Let's do that.
We do that with Jen Rhee. She covers all the antitrust litigation for Bloomberg Intelligence. And boy, Kroger's and Albertsons, the judge said, you guys can't do this deal. What's going on, Jen?
Yeah, I mean, I think this was widely expected because for anybody that went to that trial, it was pretty clear that there were some big problems with that deal in many local regions in the United States. From an antitrust perspective, when the FTC looks at something like this, they're looking at what consumers' options are, where they can substitute if they don't like the prices or the quality at a certain grocery store. So you have to look at a lot of little localities all over the country. And what they found was that in thousands of regions, what they believed this merger would create was just undue concentration that would allow prices to go up, maybe quality to go down. And the judge agreed with the FTC and said that is the case.
Is there any risk here that Albertsons goes out of business? I mean, if Albertsons and Kroger are facing the juggernaut known as Wal-Mart, are the people in Washington oblivious to the competition every day from Lisa Mateo being in aisle 5 at Costco?
The thing is, that is a defense in antitrust. The problematic deals can be defended by claiming in court that you are a flailing firm or a failing firm, that if you don't do this deal, the seller will not be able to compete as viably or will go out of business. The companies didn't present that defense. So the judge has to make her decision based on the evidence that's in front of her. And she specifically said, look, there was no argument made here that if this deal isn't done, that Albertsons is going to fail or go out of business.
So
she can't decide that.
Okay, come on. At Case Western Reserve, when you were studying it, did Kroger or Albertsons screw this up?
Well, Albertsons is now claiming that Kroger screwed this up. It looks like they're suing Kroger for a lot of money because they believe Kroger wasn't listening to the FTC's concerns and didn't put together an appropriate remedy. And in fact, this deal did fail largely because the remedy was insufficient. So we're going to have to see, how much Kroger directed that remedy, what it would be, where they dug in their heels, if Kroger wanted some more robust remedy, and Kroger refused, and then the remedy failed. We'll have to see how that all plays out, because that was a big component of this. Had that remedy been better, maybe this deal could have gone through.
Does this deal come back after President-elect Trump is inaugurated?
You know what? I don't think so. To start, they have spent millions and millions of dollars and spent now over 2 years trying to get this deal to go through. I think at this point, and now obviously they're going to be antagonistic toward each other because there's going to be this new lawsuit. I don't really think that this comes back. And I'm also not so sure that these giant deals between two competitors are actually going to fly through with the new FTC under President Trump.
All right, Jen, thank you so much. We appreciate it. Jen Reed, she covers all the antitrust litigation for Bloomberg Intelligence. And I thought, if I'm Kroger's, I say to my lawyers, just tell me what I got to divest. And if it's a decent package, I'll go in and make this acquisition bid. I don't know what happened. I mean, you kind of have to know going in.
I read it yesterday, and the overwhelming thing here, which Attorney Reese said really wasn't part of the trial, is Wal-Mart and Costco.
Yeah.
Usually it's about Kroger and Albertsons, but I mean, Lisa, help me out here. If you look at the grocery stores of the Northeast, they can't compete with Walmart and Costco, right?
No, because they offer, Costco in particular, they have the better deal for your buck. You get more for your money, but you're also paying a membership fee too, which is
come on, the membership fee's a cup of coffee.
Kind of. I mean, $140 for the year is.
Yeah, but you're spending $800 every time you show up.
But I do get
right?
that money back at the end in a check. Yes, because I spend so much there.
I just can't imagine. I'm shocked and learned that Walmart's the biggest grocery chain in the country. I didn't know that.
And Costco's catching up to them. Costco's almost as big as Kroger.
Yeah.
So to me, this merger is about Walmart and Costco, and yet I'm reading that it was ignored in the trial. I wonder if that's what Elberson's suing about.
Yeah, and I think they're also suggesting that maybe the package of divestitures wasn't good enough, and that's what caused this failed.
We're going to go into a conversation. Paul Sweeney turned to me the other day. He said, Goldman Sachs is at $600. Their management, maybe management of the year, coming out of a troubled year. Dennis Coleman now, their chief financial officer out of Princeton, decades with Goldman Sachs, in conversation with our Shonali Bassick.
Our priorities as we head into 2025, given our outlook and given our two world-class interconnected businesses, we are really optimistic on the prospect to continue to drive growth for our clients and for Goldman Sachs. And so my number one priority is making sure that all the people of Goldman Sachs are front-footed and focused on clients. We can serve them as best we can heading into 2025. Many of the other things should take care of themselves.
Front-footed and ready to go. If you take a look at the market reaction, you see so many investors betting on investment bank stocks, Goldman benefiting more than any of the big six banks out there. Your stock is up more than 52% this year. What does that mean in terms of what investors should expect for next year? Is that runoff justified? Is there more to come? How much activity should they expect?
So I think what investors see is a combination of factors. They see an improving macroeconomic backdrop. They have increasing optimism about the growth trajectory in 2025. And they recognize that Goldman Sachs has established leading market share positions across both global banking and markets and asset and wealth management. Certain of the activities within our portfolio of global banking and markets have not been performing at their ultimate potential. Yet our rankings and our market share positions are absolutely top. And so as we see an uptick in activity heading into 2025, I think they appreciate that our firm, with our client franchise, should be able to drive a lot of elevated activity.
Do you think there could be some choppy waters on the road to more M&A? You look at just the last couple of weeks of the Biden administration, you see the Kroger-Albertsons deal fall apart under the weight of the FTC. You see a bigger crackdown on that Nippon Steel, U.S. Steel merger from the Biden administration. And you have Trump naming somebody to lead the FTC with Andrew Ferguson. Stack it all up together. Do you think that there could still be headwinds to M&A given the future antitrust environment and the one that we're still making our way through today?
So I think we've seen some sustained growth in M&A activity, moving towards sort of the average levels of activity over the last 10 years. There have been a number of headwinds to the unlocking of the ultimate quantum of M&A activity over the course of the last year. I think with Ferguson's nominee, there could be a new direction at the FTC. He obviously, as a sitting commissioner, dissented with the current leadership on a number of cases. And so we could see a more favorable environment heading into 2025 that could actually spur more by way of CEO confidence and in turn unlocking more investment, more activity, and provide a more favorable strategic backdrop.
Now, what is it that you're preparing for? We've had bankers tell us, investment bankers across Wall Street tell us they're preparing for the return of the mega deal. Do you think big ticket, more than $50 billion deals can come back at scale?
So we historically have the leading market share in both announced and completed M&A over many, many, many years. And a big part of that franchise is doing some of the biggest deals as they present themselves for opportunities. As we move into 2025, given where the markets are, given the backdrop, given the quality of our client franchise, and given the level of engagement that we've seen post the turnover in the administration, we are optimistic about the prospect for more deal flow. And in particular, we see through our business inquiry coming from clients for more by way of capital committed financing transactions. That is in and of itself a signal for a different type of transaction and a different level of activity. Dovetails very well with our capability set, and I think is reinforcing of the prospect for more deal activity.
You know, it's interesting. As I sit here with you today, you also had that CPI report and an inflation report that did drive yields lower. But when you look across the horizon, you are looking at a lot of uncertainty when it comes to the interest rate outlook from investors. How much can that throw a wrench in the activity for next year? Are you worried about the direction of interest rates, especially if tariff policies were to drive inflation higher?
So interest rate policy is obviously a really big piece of the equation. Overall level of interest rates coming down. Notwithstanding the CPI print this morning, I think we're still pricing a greater likelihood of a 25 basis point cut into the end of this year, the December meeting. As we head into 2025, there are some uncertainties. We'll have to see what types of policies present themselves. We'll have to see how the economic growth continues to unfold. There currently are more cuts priced into 2025, but that type of environment where you have rates coming down, you still see sustained levels of GDP growth, unemployment under control, that is a favorable backdrop for ongoing levels of deal activity.
So do you worry at the end of the day at all about the necessity for an interest rate rise even next year, or do you think that wouldn't even be on the table?
I'm in the business of worrying about a lot of things. As a CFO and as a CFO of Goldman Sachs, we see risks in many different places. So we're always focused on sort of counter consensus moves that could occur. But I think the consensus that we're seeing in the way the markets are pricing things and what we're seeing from our clients and based on their own behavior, for the time being, the base case expectation is for an improved and benign backdrop. But of course, the unexpected things can happen and we need to be prepared for that.
What is your biggest worry when you head into 2025?
So there are, again, long list of things that we need to be focused on. The things that are very much top of mind for me these days, geopolitical risk. Recently we discussed, and in the last week alone, we've seen, government disruptions across Korea, across France, across Syria. That's just in 1 week. So it's a reminder that around the world, there are levels of instability that you need to be mindful of. I'm always, quick to point out that cybersecurity is a risk. It's a risk that all of us experience operating in a global and interconnected world. So just off the top of my head, those would be two things I would flag for you, Sonali.
Another thing you mentioned a little earlier is that your number one priority is to get your people on their front foot for next year. What does that mean? If you think about the talent story, is Goldman Sachs ready to be hiring bankers once again to capitalize on that M&A activity? How do you think about where you stand on the talent story today?
So talent is a mission critical component of Goldman Sachs. It's one of the most important things we need to be successful as a company and successful for our clients. Very proud history of attracting the best and brightest, developing them, and then making sure that we create the kind of work environment, client franchise that makes them feel confident they can develop long-term productive careers at Goldman Sachs. I think there's an excitement that they feel in terms of the overall uptick in activity. These are professionals at the top of their game, and they want to be involved in some of the most impactful and consequential, developments that occur across the global capital markets. I think they recognize that being part of our platform is a really special opportunity for them to realize their potential and serve their clients as best as they possibly can.
But does that mean it's kind of like a now hiring sign for Goldman Sachs, or do you feel like you have what you need to get the job done for next year?
Fair question. So we're always focused on ensuring that we have the absolute best people in almost every sort of subsegment of our business. We feel really good about the team we have at Goldman Sachs. We feel really good about the depth of the team that we have at Goldman Sachs. In many respects, Goldman Sachs is the talent factory. And I've been at the firm almost 30 years, and we develop really highly talented professionals. At some point, they leave the firm, and then there's another professional that steps right into the shoes and carries on the strength of our franchise in a really positive fashion.
A little earlier, we were talking about how Goldman stock has risen well over 50% this year already. You know, what's going to drive the next 50%? Because you think about those drivers for your stock. Is it the M&A story? Is it that push into asset and wealth? What should investors be hanging their hat on?
So our story at this point is pretty simple. We have two world-class businesses, both of which are positioned to grow into 2025. On the global banking and market side, the piece of the puzzle that we could see incremental growth unlocked would be through ongoing capital markets activity, and particularly capital markets activity that is connected to strategic activity. So less by way of plain vanilla or refinancing activity if you think about the debt markets, and more change of control or deal-related activity, which is something we're particularly good at doing for clients. We can see more of that activity. That will propel growth across that segment. We have a global broad and deep FICC and equities business, leading positions in the equities business. Number one, top three in FICC, covering the whole globe across products. That remains an attractive opportunity set for us. And the big growth engine for the firm sits within asset and wealth management, where we've communicated publicly we expect to drive top-line revenue growth, high single digits, across the durable revenue streams of management fees, private banking, and lending. And our optimism for that is unchanged, and we continue to drive margin improvement towards our mid-20s targets and unlock better returns.
How much will lighter regulation make a difference for you, with the expectation that things would be lighter under a Trump administration?
Should we have lighter regulation, which I think is our expectation? I think it's the expectation of the markets. That can just reduce sand in the gears of activity across industries, across the globe, give people more confidence that they can actually go out and try to affect strategic change that they need to grow their business. That should catalyze more activity across our franchise. We and the whole sector should be beneficiaries of that environment.
Dennis, thank you so much for joining us here at your conference. Of course, this is the Goldman Sachs Financial Services Conference. That is Goldman Sachs CFO Dennis Coleman.
Sonali Basak, thank you so much. Greatly appreciate that. We're the Chief Executive Officer. What we're going to do here to get all the time we can is go, when you get a new office at Stanford University, you know, it's like living large. I mean, it's like gorgeous out there.
I know, perfect.
Her public service to this nation has been extraordinary. We're going to squeeze in a couple minutes here with Elizabeth Economy, and then she will join us in the 9:30 after we get the markets open with Lisa Mateo. She has just served Secretary Raimondo at Commerce, but far more before that, she served all of us with absolutely definitive coverage of China. Her third revolution is a definitive cover-to-cover read on President Xi. Elizabeth Economy, now at Stanford University. Dr. Economy, thank you so much for joining Bloomberg Surveillance. What is our intelligence on Beijing? Is it general sense? Do we know what's going on with the Chinese leadership?
I think we have a reasonably good idea of where Xi Jinping wants to take the country. If you're asking, do we have good visibility into the inner workings of the Standing Committee of the Politburo, the top 7 people that rule the country? I'd have to say the answer is probably not at this point. But I think we have a fairly clear sense, both in terms of what China's doing at home and its foreign policies, about overall directionally where Xi Jinping wants to take the country.
How is their military projection? I mean, from the budget standpoint, and we can talk about deflation in China and the capitalism or non-capitalism of China, but the fear, the arch fear across all, including the South China Sea, is their military projection. Are they funding? Are they a defense? Are they an offense juggernaut?
No, absolutely. I mean, they have the largest military in the world. Their Navy is now larger than ours. You can see with the activity that they've been undertaking over the past, 6 months, sort of accelerated military activity in the Taiwan Strait, in the South China Sea, very aggressive. And I think this is all part of, one of Xi Jinping's major sort of directives is really to reclaim the territory that he considers to be Chinese sovereign territory. And so I think they use any excuse they can to sort of do these military exercises, I think in the hopes basically to coerce other countries and Taiwan just to accede to Chinese demands. That hasn't happened yet, but I think that really is the intention. So there's been no let up, despite the challenges in the Chinese economy. There's been no let up in terms of their spending on defense, in terms of the overall trajectory of their military and their desire to be able to project force in meaningful ways.
Dr. Economy, what do you believe the Chinese view is of President-elect Trump here?
So I think, look, there are as many, views in China about President Trump as there are in the United States. I think there are people who welcome President Trump for a range of reasons. There are people who are kind of, MAGA Chinese who like the president's views around values, or at least the views that were expressed during the campaign around values. There are people who think that President Trump is going to be good for China because he's going to pull the United States, back out of a number of international institutions, things like the World Health Organization or the Paris Climate Accords, and leave a lot of space for China to assert its leadership on the global stage. People who think that there are going to be problems between the United States and our allies because President Trump has a sort of more transactional approach to how to navigate our relations there. And so, we saw a lot of problems in the first Trump term with our European allies that China tried to exploit. I think they're thinking in those terms again. Are they going to have opportunities like that? At the same time, of course, President Trump has promised variously to level, 60% tariffs on, all Chinese exports, 25% tariffs, 10% tariffs. We don't know where, the number's going to land. We don't know whether it's going to be, whether the tariffs are basically, the threat of tariffs is basically a tool to get China back to the negotiating table. All of these things are sort of up in the air at this point in time. So a mix of views, I think, about what President Trump might mean for the country.
A deserved 3-hour conversation with Professor of Economy, Stanford University. We're going to get the markets open here in less than 20 seconds. We're going to come back to Dr. Economy. Joe Mazzola will stop by quickly here for his views, and then we'll move forward looking at commercial real estate. This is what surveillance is about, Paul.
Yeah, just
I mean, it's been so busy today. We haven't talked about Duke incarnate word.
Incarnate word.
Big win for Duke today as well. Let's get these markets open. Futures up big. Lisa?
And you got it. Opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with the new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, we are started. We'll start with the S&P 500 up about 0.4%, 29 points, 6,063. The Dow up 0.2%, 91 points, 44,333. The Nasdaq up 0.7%, 151 points at 19,838. The 2-year yield 4.10%. That's down 3 basis points. The yield on the 10-year, 4.21%, and that is down 1 basis point. At the open, want to check in with Macy's after it trims its outlook. It's down 10%. And finally, Broadcom up 2% and Apple up just 0.1%. That's after the report Apple working on an AI chip with Broadcom. That is your Bloomberg opening bell report. Paul and Tom.
Lisa Mateo, thank you so much. Green on the screen again. We're following many, many different stories this morning. We continue with Elizabeth Economy of Stanford University. One of the chapters, Liz, in the Third Revolution, The Lion Awakens. That is the arch fear, bipartisan fear of America. You live this in real time with Gina Raimondo at Commerce. In the Trump administration, we assume the lion awakens. How do we quiet the lion in the coming 4 years?
I mean, I'm not sure that there's really a way to quiet the lion. I think there's a way to ensure that the United States, is the dragon, I guess, in the sense that, what I think our message should be is that we're still looking toward U.S. leadership on the global stage, right? And U.S. technological leadership and military leadership and leadership in the values domain. I think, to me, what we want to do is to run faster. I sometimes worry that we over-index on our defensive tools, and so that would be a concern, I think, with President Trump and, sort of the approach of just levying more tariffs. I'd like to see us invest more, in science and technologies. We're still waiting to see the science part of the CHIPS Act. I think that, to me, is what the United States needs to do, and not simply say, we don't want China to do this, stop China from doing that.
Liz, you were 20-something, and you were at Michigan, and you changed the world where the river runs black on the environment in China. You, more than anyone, has been over there more often. GM just pulled out of China effectively. Is American investment dead in terms of JV or investment in China?
It's not dead, but there certainly has been a precipitous fall off, and it's not just the United States. It's FDI into China overall. So our European partners are the same way. Asian partners, same thing. I think there's just a sense that China has not been welcoming to private enterprise. Combination of factors, things like the anti-espionage law, controls around data, the lack of information around what's going on inside the Chinese economy, right? The Chinese have been constricting the types of economic information that they're willing to share. And then there are Chinese, areas where China has just become far more competitive. And I think the car industry is a good example of that, where I think multinationals find it more difficult to compete. But China doesn't want FDI to drop off this way, but they're sort of caught, right, I think, in a bind because Xi Jinping isn't really willing to undertake the steps necessary to open the door back up to private enterprise, even in his own private enterprise. I think it's problematic.
Exactly, and that's kind of where I wanted to go, Elizabeth. I mean, does President Xi, closing off his country to foreign direct investment and to just the world, it's not just technology, it's just broader trade, and is there real support for that type of policy in China?
Well, I think, the way that Xi Jinping can drum up support for this, and so let me say, I think certainly not. I think, the private sector in China has certainly suffered over the past decade in some. I don't think there is a lot of support. There are reform-oriented economists who've tried to get Xi Jinping to, take his hands off the controls. So I think, no, I don't think there's widespread support, but I do think to the extent that China feels as though it's under assault from things like tariffs or export controls, that bolsters Xi Jinping's, argument for dual circulation, the argument that China can innovate, manufacture, and consume largely within itself. Again, Xi Jinping doesn't want to close off, he certainly wants China to export. And he wants companies to invest in China. He wants them to bring, high technology, stuff that China doesn't have, he welcomes. But he's also committed to making China, indigenously capable.
What is your first, I think about Jonathan Spence holding court at Yale. What a privilege it would have been to be in that classroom. It's Stanford, among the elite cherubs, Liz Economy. What's your first message in the first lecture on Liz Economy's China?
China has a transformative vision for the international system and for China's place within it. And the United States needs to step up its game.
Good. Liz, we need another book. Get to work. She's working like a 4-hour work week out at Stanford. Elizabeth,
I'm up at 6:15 to do this. What do you mean?
Yeah, see at Eli's Coffee on Madison. Elizabeth Economy, thank you so much for joining us. She's professor at Stanford University. Definitive, The River Run Black. Black. I have it. It's in the aisleway at home, on the East Wing. And she's at Michigan. Nobody knows who she is. And she does this book.
I know.
Boom.
Amazing.
Huge success. The River Runs Black, an older book. The Third Revolution, now on President Xi. On the markets here, we had to wait for SPX to go up 0.6%. NASDAQ up a stick. Joe Mazzola joins us, head of trading and derivative strategy at Charles Schwab. Joe, let's start with what we are doing. Here in December, what are Schwab accounts doing, not talking about? What are they doing?
I think that's an important distinction, Tom. What they're doing is they're buying, but they're selective. I wouldn't say the buying has been across the board. And what I found interesting is that the sector flows that we saw here at Schwab that saw the most inflows were probably ones that you wouldn't think about. Technology, of course, that's usually at the top of the list. But two other ones I thought were very interesting, and that was healthcare and staples. So it shows that clients are maybe de-risking a little bit, taking off maybe some of the higher beta names. Now, in particular, the names that are most heavily traded are NVIDIA, Palantir, and AMD. So that maybe runs kind of counterintuitive. But those are some of the IT names, that they traditionally tend to trade a lot. Where we saw some selling was more so on the consumer discretionary side. We saw Disney, Tesla, those were two big sales, and then Apple being the third.
So, Joe, we're sitting here with the S&P 500. I think 57 record highs this year. That gets
I
me
wouldn't
nervous.
know. I'm in all cash.
You're in all cash, sleeping safely. That gets me nervous. Does that get you nervous?
But that doesn't get me nervous as much as when I look at the percentage of household equity. You know, right now, about households are holding about 60% of their accounts in equity, and that, I mean, look, it's good for brokerages, right? But at the same time, I wonder if there is some catalyst, some type of a drag or some pull down in the market. Where's that next leg of money coming from? I think, what we've seen specifically these last couple of months is I think retail's participated, but I think a lot of the money that's been driven into the market has come from the institutional side. And specifically kind of what we're seeing here is that, like I said, there's been a little bit of a de-risking, not necessarily selling. I mean, the stacks was up, right? But when you look at November and kind of the $200 billion of equity ETF inflows that we saw industry-wide, and at the same point, you're looking at a 5% move in the S&P 500 during that time. It does make you wonder, and it does give you a little caution. And I'll mention one other thing to that, guys. Looking at the VIX, the VIX is sub 14, so 13.5 right now. I know we still have a couple more weeks in December, so maybe you don't want to pay the time decay to hold that during the holiday season. But boy, I think once we get past that Fed meeting, it might make some sense to add a little protection.
So, Joe, in 2025, what's going to lead this market? Are there sectors you're looking for to lead this market? Are there maybe some investment factors you're looking to lead this market? What are you telling your clients these days?
Yeah, I think it's more of a factor analysis, because I think what we've seen with the sectors as a whole, it's just the volatility of the rotation. It's really kind of hard to kind of get in front of what that next buy will be. I'll give you a perfect example. October, the biggest sale that we saw was in IT from our clients, and then in November, it's the biggest buy, right? So, you're going back and forth. And so what we would suggest for clients to do is, look at more of a factor analysis, keep an eye on things like free cash flow, keep an eye on things like, positive earnings versus negative. And I know that sounds pretty simple, but just take a look at maybe even something like the Russell. If you look at the big move that came out of the election, a lot of the gains in the Russell were by companies that weren't making money, right? So, some of those, the non-positive earnings. So we would say move up a little bit on that quality scale and look for earnings and look for companies that are generating free cash flow.
Do you assume, Joe, are we in a time of exuberance? I can't. I mean, Sweeney tells me we're exuberant. I don't feel that exuberant. Is Joe Mazzola bull market exuberant?
I would say, Tom, that we're in a time of, cautious optimism, if you will. And here's why I say that. If you look traditionally and historically, you get a bit of a grace period in the markets from an election into inauguration. And I think what happens is the markets are riding that a little bit. And the reason I talked about, the VIX and volatility, because is if you look at, what is going to align with the inauguration, you're also going to have Q4 earnings are going to be coming out at the same time as well. And until we really start to see maybe analysts start to downgrade those earnings a little bit, it does seem like the bar is a bit high for 2020, especially if we're not factoring in more than, rate cuts.
Joe, I got to go. It's been 2 hours in a row. I've shorted Michael Barr. He knows the Bills are going to beat the Lions.
Yeah.
Joe Mazzola, thank you so much. Greatly appreciate it. We'll get to Michael Barr in a moment. Paul, I thought you told me December's slow.
That's what I thought.
I came in today thinking, not a snooze fest, but
no,
I thought it'd be a little slow.
Got lots of economic data this week. We've got M&A that's getting announced. We've got, I'm thinking about Omnicom and IPG.
Off?
Hershey's, that deal's still going to...
It's still on.
Still on. What's off is the Albertsons Kroger deal. So we got deals going on the table, coming off the table, lots of economic data, and people trying to think about, all right, 2024, the index has been great. What do I do next year now?
Joe Mazzola said Apple, I believe he said Apple is a little, people are selling.
A little bit of a
is
source
a general
of cash,
statement here?
I mean, it's had another solid, kind of run here.
Hold on. We can do this, folks, in the DES screen. Someone out on Twitter going after Mr. Bloomberg in the DES screen, making fun of use of the description screen.
Love the DES
screen.
The
DES screen saves us every single day.
Time.
I mean, it's a key function. And I got on Apple. I'm looking here. My eyes are, I'm sorry. There it is, market cap. 3.765 trillion.
Yeah, that can work.
I'll extrapolate and tell you what price on 4 trillion.
Yeah.
But I don't think there's been nearly enough buzz in the last X number of weeks on the Apple moonshot we seem to be living right now.
29% year to date here. So we've got this company. It's just extraordinary. All-time high for this stock. You put up the chart, and it's just extraordinary. So,
Gurr is
bets against Apple?
Gurr is so tough with his questions. Do you think he'll ask Secretary Yellen if she owns Apple?
He might.
He might.
Yeah, I think he's interviewing her.
It's within the hour, 10:30.
Yeah. Fantastic. We're going to have that.
On the Alex Steele Hour.
Alex Steele Hour. We'll have it. Absolutely.
And it'll be David Gurr. But, it'll be some really interesting questions here about Treasury and the shift over here to the new administration. Well-timed. And, of course, he's going to sneak in some Fed questions.
Yeah,
I mean, it's just
absolutely.
the way Gurr.
Why wouldn't you?
The Gurr rolls.
He's down in D.C., so getting that done.
Well, and wait a minute. I mean... But that's more Chapel Hill in the 10 o'clock hour.
It is. That's okay.
It's
That's
too much.
Okay. I know. He's all right. He gets a pass.
David Gurr in 45 minutes with Secretary Yellen. Looking forward to that. Okay, I can now speak. I can relax. The NASDAQ is up 1%, printing moments ago. 21,583 on the NASDAQ. These levels are killing me.
Yep.
Dow's lagging a little bit. SPX on fire. 6,068. From New York City, stay with us worldwide. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, one of the last reads on inflation before the Fed's next policy decision came in right where economists expected. The core consumer price increased 0.3% for a fourth straight month, and that's really given a lift to the markets. We're also on records watch, so let's get right to it. The Nasdaq up 1%, 206 points at 19,894. The Dow up 0.1%, 60 points, 44,308. The S&P 500 up 0.6%, 38 points at 6,073. The two-year yield, 4.10%. That's down 3 basis points. The yield on the 10-year, 4.21%, and that's down 1 basis point. Want to get to Albertsons because we've been talking about it. Terminated its $24.6 billion merger pact with Kroger, filed a lawsuit against Kroger for breach of contract. So we have Albertsons up about 0.6%. We have Kroger up about 1.5%. And then you had Mondelez. It approved a $9 billion buyback. Comes after reports that the company was looking to buy Hershey. Mondelez up more than 2.5%. We have Hershey down 5%. That is your Bloomberg Business Flash. Paul and Tom.
To be clear on this, and as usual, I'm behind. It's not Lisa's fault. Is the Hershey deal done?
No.
Just announced.
It's announced.
Yeah.
Okay, so they're going through with it, even with a share buyback.
Oh yeah.
This is not the way it used to be.
Well, it's an all-stock deal for Mondelez, so they got to make sure their stock price stays higher. So they're going to do this buyback.
Okay.
So yeah, it's not bad.
They declared a dividend.
Yep.
Okay.
So,
can we talk about something stable?
Let's do it.
A real estate across America?
Real estate across America.
We get a huge response when SM Najija is CEO at Marcus and Millichap out in LA. Let's first talk about the fires. Is people living in Southern California, do you say to Gavin Newsom, how do we make this end? I mean, is there like a conservation effort? This is right around where you live, right?
It is.
Do you live next door to Barbara Streisand?
I have a lot of friends who live in the Malibu area, or the whole region is just
How do you
very
fix
susceptible. You fix it by much better proactive management and solutions before the problem really happens. But we're kind of used to the fire threat and earthquakes. It's become a little bit normalized, which is itself kind of scary. People don't pursue solutions when it's something you've gotten used to. But it's a major problem for us in Southern California.
Go ahead.
Yeah.
Please.
No, it's just it's amazing. And having owned property in Northern California, real problem is getting insurance. You have to go to Lloyd's of London.
My father was near you years ago, could not get insurance.
Yeah, it's tough. Commercial real estate. I see 2025 a turning point for commercial real estate investment. You're not the only one that's saying
What'd you do? Look at a crystal ball?
That's what I'm looking at his notes here. You're not the only one saying that. I've had a lot of people come in here and say, we think we've seen the bottom. We think this thing is turning. We think there's great opportunity. Is that how you see it?
It is. That's why we put it on our notes, which we submitted to you. And if you look at the inflation read today, if you look at the Fed pivot finally, even though gradual, the Fed isn't going to do anything radical. The fact that the 10-year is come back in a little bit. We've had steady job growth, but not too much job growth to cause inflation concerns. You've had 2 years of price corrections. Commercial property values have adjusted by, on average, 20, in some cases, 30%. And you have an asset class that is not seeing new supply become a problem. Supply is pulling back. Construction starts are down. And what I've seen since I saw you last, literally 90 days ago or so, I've been on the road almost nonstop. And what I'm seeing is a shift for the fear gauge to go from uncertainty to fear of missing out.
Okay, but there's a wall of money to go after real estate. There always is. What have you learned this year in your travels about Class B, Class C, ugly real estate nobody ever looks at? I mean, is it going to become apartments? Are we going to bulldoze it? What have you learned about this crisis?
Tom, I think you're referring to old, obsolete office buildings, which are very expensive and difficult to convert to anything. There's some conversion of office into multifamily that's been successful, but the amount of inventory that is suitable for that is maybe 5 to 10% of the inventory, because it's so hard.
So what are we going to do, bulldoze it all?
That's the big question for obsolete office space. Unlike obsolete retail, where 10, 15 years ago, e-commerce was just devastating brick and mortar retail, you could reimagine those shopping centers, rebuild them, or entirely basically demolish them and rebuild. You can't do that as much with obsolete office space, but that is such a small fraction of commercial real estate. You talk about apartments, people can't afford to buy homes, so they're staying in apartments longer. That demand is very strong. Retail has made a big comeback. I'm here for the shopping center convention. ICSC is the largest sort of participants and trade group for retail. 10,000 people are here in town in New York City in the next couple of days.
What are they talking about?
They're talking about the strongest demand for brick and mortar retail in 20 years.
Really?
That's what they're talking about.
No, we're not talking Madison Avenue. Where are we talking demand? I mean, like in the suburbs, demand for retail?
Suburban, open air, neighborhood, community shopping centers. Urban retail is still hurt, no question about it. Just like the urban office market is still not quite back.
Yeah, Paul lectures me on this nonstop.
I mean, you can just look across the street of Madison on Lexington Avenue. It's really tough. So if I'm in a local community, USA, I'm a local developer, I want to build some condos or apartments, is my local bank going to give me the loan to do that?
If you're an existing investor with a track record, that sponsor quality is king right now. Regional banks are still under a lot of pressure because normally as loans mature and come off their books, fresh capital is freed up to recycle back into the market. A lot of loans have been extended because of the trouble that we faced over the last 2 years, and therefore banks are not as aggressive. It's gradually getting better, but there is financing available for quality sponsors, making deals that make sense. And we did 390 transactions in the last 12 months, I should say, transactions with 390 separate lenders across the country, because our finance team is constantly replacing lenders that pull out of the market with lenders that are coming back into the market. So it's a very fragmented process to find loans for our private clients, essentially. Larger institutional clients have lines of credit and other ways of accessing debt.
You're a West Coast guy, Seattle academics, down to LA. he's hanging out at Michael's down in Santa Monica like 3 days
I
a
know
week.
Calabasas.
I'm hardly ever there. I live there, but I'm hardly ever
there. He walks
there.
into the Sunset Tower Hotel and the place stops.
Yep.
Hassan, what does the East Coast not get? What is the corridor from Washington to Boston? What do we not get about the vibrancy of your world?
Well, the vibrancy of our world has been challenged quite a bit. There's a lot of policies in California that are driving companies and people out of the state. The state has a lot of local issues. Thankfully, we dodged an extreme measure for ridiculous rent control that was defeated, thankfully. But so California, other Western states have a number of challenges. But what drives it is the educational institutions, trade, and of course, entertainment, and the fact that it's a huge tourism destination. One thing I want to make sure we talk about before our time is up is the favorable election outcome toward the 2017 Jobs and Tax Reduction Act, which had a lot of favorable provisions for commercial real estate that are more likely now to get extended.
Okay.
That's going to be another catalyst for more capital coming into commercial real estate.
Do you shop at Albertsons or Kroger?
I shop at 7-Eleven.
7-Eleven?
No, I'm always on the run. I hardly ever have time to actually do heavy
That's
grocery
okay.
shopping.
John Tucker shops at Wawa, which is sort of the same.
Route 36.
Same idea as well. Hassam, thank you so much. Hassam Najish is with Marcus and Millichap out in Los Angeles. Just wisdom there.
Great to be with you. Thanks for having me.
Paul, I've got this totally wrong because I'm looking, at 54th Street or 44th Street, going, the world's coming to an end.
Yeah, no. You got the
There's
rest
a
of the
whole
world, they're
world
doing
out there.
okay. They're doing
What are we going to do when Apple turns 250? Are we forced to speak to Dan Ives tomorrow?
We might have to. I mean, he's been telling us to buy tech, and he's been right. So we'll have to see how that goes. But again, another 30% pop in the stock this year for our friends at Apple.
We had a revolt today here within the news. So the control room went mental. We did Stevie Nicks in the last hour, and they say more Stevie Nicks. So that's what we got to do.
That's how you
here.
do it.
I mean, you're going to do it. Dave Grohl of the Foo Fighters, there was a mixing board, a console in LA right near where Hasim lives, and he said, "You're not selling it to somebody. I'm taking it north." He took it up to Seattle, Vancouver area. They made a record album with Stevie, Dave Grohl and Stevie Nicks. Have a good day. Coming up, the Alex Steele Hour on Bitcoin, on Apple to 4 trillion market cap.
So easy.